Yes. So what are the issues that we have discussed where you have difficulties in your examination, and what are the solutions, possible solutions which you have? So when you talk about your indirect taxation, the first issue that one of the students said, that how to crack ITC question. So this ITC question will be solving by two things: knowing the simple tables or master table presentation. Four tables. Do not work the way I say is working out. You have to work the way it is going to be suggested to you. So I'll be suggesting you a very simple way. Only in that particular way you have to write first. Right. Second, we'll be taking two questions so that you'll know on the tables எப்படி present ஆகும் என்ன ஆகும். So at that point in time, I'll not be taking the tables, but answers சொல்லுவேன். In the table 1, table 2, rough I'll be writing answers. Second of the issue that was pointed out by someone else was how to crack MCQs. Simple solution. We'll be taking two sets of exam paper, Jan and May. உங்களுக்கு தெரிஞ்சிரும் எப்படி solve பண்ணணும். Third was the issue where one of the students said RCM. So for that, I'm sorry, you have to by heart RCM entries. In the type of service, in the type of goods, who's the supplier, who's the recipient. But don't worry, adukku or partial solution irukku. How? ABC analysis. There are very important RCM entries and important RCM entries. So you need not focus on everything. So adukku or partial solution is there. The fourth thing that was addressed. What was the fourth issue? Amendments. So she said about amendments, don't worry, we'll incorporate the amendments for your September exams, even relevant for Jan exams within that particular lecture. Amendments varumbodhu highlight pannarva. Last thing was time management. It was all about time management, and I had said very specifically, time management is very simple and easy. Take MCQs. Do not take the first question which talks about ITC and multiple chapters like exemption, RCM. Take other simple questions. Even if you go in reverse order, we can easily understand that. I'm not exactly telling to go in reverse order. I'm just telling you, after MCQs, do not attempt that question of ITC which incorporates classification, that is exemption, RCM, etc. Even if you're 200% sure. Yes, you may know the answer. உங்களுக்கு தெரியும் sir, 4 tables இருக்கு, ரொம்ப சிம்பிளா தான் தெரியுது. Okay, understandable. But what to do? Take other questions, solve them. Your speed will increase, then finally take that particular question. So time management can be sorted out by that. Even while taking two exam papers, we'll be seeing how easily it can be done. And the main thing that I wanted to address but no one pointed out, I myself said it, how to revise. And how are we going to complete this in the entire 14 to 15 hours? Everybody complete panna porom. We are strictly going to go by ABC analysis. Strictly by ABC analysis. என்ன அர்த்தம் அதுக்கு? We will be only sticking to the topics where they are very important 5-star or important 3-star. I will not be taking areas, other areas. Do not expect me to take those areas. நான் அதை எடுக்கலன்னா அது important. And every time you will be getting a text, maybe another 10-15 minutes. So text வந்தோன்னே அது mark பண்ணிக்கோங்க, 5-star or 3-star. That's it. That's a very simple way. Even this will be helping out during your exam day, because exam day you have to revise both direct taxation and புரியுதா? So we'll be making out very simple way by ensuring that your concepts are very clear. In books you can give it now itself, Shakka. இப்போ கொடுத்துக்கோங்க. Okay. So when you're talking about your DT and IDT, this thing would become very simple if at all you're going with your ABC analysis. Right? So you'll be getting the books. In that books, please mark 5-star and 3-star. Now let us start with the first topic. With this introduction, I guess உங்களுக்கு issues I have consolidated. If at all you feel you have any other issue, we can discuss that, and I'll make sure that in that 2 days it is being addressed some way or the other. இப்போ GST in India பார்க்கும்போது one question was repeatedly asked, not repeatedly asked, 1 or 2 times asked, difference between direct tax and indirect tax. So I'll be addressing that particular area, direct tax and indirect tax. Direct tax is always on persons. DT is always on person, natural person or artificial person. Your company is an artificial person, firm is an artificial person. DT is on person, whereas indirect tax is on what? Goods and services. And that is not the main difference. The main difference between direct tax and indirect tax is, direct tax you cannot shift the burden. Income tax you have to pay from your pocket. Unga pocket la you have to pay. So income tax you are required to pay from your pocket. So best example of direct tax is Income tax. Best example of indirect taxes, GST, customs duty, etc. GST, we will stick to GST. Now, when you talk about your direct tax, if you're paying even 1 lakh rupees of direct tax, that is income tax, you have to pay from your pocket. You have to pay from your, you cannot shift the burden. I cannot collect from anyone else. But what is the main difference between DT and IDT? DT, income tax, burden cannot be shifted. IDT, GST, burden is shifted. Burden is, so if I am the manufacturer, I'll shift the burden to wholesaler. I'll pay GST to the government, but I'll collect it from the wholesaler. Wholesaler will shift the burden to the retailer. So wholesaler will pay, but who will reimburse? Retailer. Retailer will also pay GST to the government, but finally who is going to bear the burden? End burden. Finally, who bears the final burden? Final consumer. Final. Are you guys clear with this understanding? So that is the main difference between your direct tax and indirect tax, apart from the other differences that we have discussed. And direct tax is actually a hero. Progressive in nature. Hero. No income, no income tax. Average income tax. Very high income, very high income tax. Right, Robin Hood. Low income, no income tax. Average income tax. Very high income, very high income tax. So it acts like a hero, Robin Hood. But indirect tax is regressive in nature. What is meant by regressive? Whether you are rich or whether you are poor. If at all you are purchasing a product, any product, be it that for that matter, be it this mic or this camera, anything. The GST portion, when it is sold to a rich person, Ambani, Adani, and when it is sold to a poor person, GST is the same. It is regressive in nature. Whether you are poor or whether you are rich, it is same GST. It is same. Supposing Ambani is purchasing iPhone, 1 lakh plus 12% GST, and a poor person is purchasing iPhone, 1 lakh plus same 12% GST, same 12,000, same 12,000. So these are the major difference between your direct tax and indirect tax. So it is a area where it is not 5-star. So you are not going to put 5-star and all for that. The 3-star question. Once or twice in your exam paper and MTP, RTP, it has been touched. Difference between direct tax and indirect taxes. Now, the next important area of this chapter where questions were asked was not about your GST history and all. Just remember one thing in your GST history. When was GST born? When was GST born? 1st July 2017. 1st July. So all you need to remember is GST was born on your 1st July 2017. 1st of July 2000. So there was a midnight launch. So that the GST birthday is 1st July 2000. It took a long time. More than 18 years. It took a very long time for GST to come. But GST was born on 1st July 2017. 1st July. GST was adopted by all states. When GST was born on 1st July 2017, Anna, one state, Jammu and Kashmir, did not accept GST on 1st July 2017. It accepted after a week. It accepted after a, so in Jammu and Kashmir it is throughout India, but Jammu and Kashmir it was 8th of July. So this area always you need to remember, though not so important, but you need to remember 1st July and 8th July. 1st July 2017 and normally it is 1st July. If nothing is asked, it is 1st of July 2017. For Jammu and Kashmir, it is 8th of July 2017. First thing. And GST was not born in a simple way. GST, unlike other acts, GST verbodu, there were a lot of difficulties. First, there should be an amendment in constitution. There should be an, only then GST could have been passed. So there was an amendment in constitution. So what was that amendment in constitution? That amendment in constitution was brought out by 122nd Constitutional Amendment Bill 2014. What is the name? 122nd Constitutional Amendment Bill 2014. 122nd CAB, Constitutional Amendment Bill 2014. It was placed in 2014. Constitution was effectively amended after it became an act? 101 Constitutional Amendment Act 2016. 101 Constitutional Amendment Act 2016. When was the bill placed? 2014. When it became Constitutional Amendment Act? 2014 and 2000? 2014 and 2000? What was the bill number? 122. What is the act number? Bill number is 122nd and act number is 101 Constitutional Amendment Act 2016. So effectively this, after this only, which was passed on your 8th of September 2016. 8th of September 2016. Then only the second step, GST Act was ready. Then only the second step, GST Act was ready and it became effective on 1st of July 2017. Entire India, Jammu and Kashmir, 8th of July. But what was the first step? First step was not the act. First step was the amendment in Constitution. Even for act, you require a bill. But that was GST bill, GST Act. This is Constitution Amendment Bill, Constitutional Amendment Act. So what is the other thing that you need to remember? The first step was bringing the act or amending the Constitution. Louder. I want answers for all my questions. Do it. It will be helpful when you are working out questions. So it is amendment in Constitution. So what was the Constitution Amendment Bill number? 122nd Constitution Amendment Bill 2000. Constitutional Amendment Bill 2000. 122 Constitutional Amendment Bill 2014. When it became the act? So what was the number? 101 Constitutional Amendment Act 2016, finally, which was effective on Constitution Amendment was not on 1st July. It is 8th September 2016. 8th September. So in September 2016, Constitution was ready. Then your GST Acts were ready and they were applicable on 1st July 2017. Entire India, Jammu and Kashmir. Got that? So what was the first step? Constitution Amendment. First was Constitution Amendment, Bill and Act. Second was GST Act. Second was, so these two areas might be for your MCQs. You need to remember these datas. Right. Now, what are the advantages in GST? This has been touched once. So I'll be only taking the advantages of GST. Obviously, advantages will automatically cover what are the disadvantages in old taxation. Automatically, this will cover what are the disadvantages in old taxation. What is the main advantage of GST? Till now, I have not marked any 5-star. Whatever we are discussing is only 3 stars. And don't worry, all these PDFs also will be shared to you with all these writings. So you will be easily understanding what it is. So when you're talking about advantages, what is the main advantage of GST? Big credit. Earlier, credit were not allowed fully. Input tax credit were not allowed fully. Credit is on your purchase or on your sales. Input tax credit is on your purchase or on your sales. Louder. Input. Input is purchase. Right. So earlier credits were not allowed fully. There were a lot of difficulties. In GST, enjoy input tax credit. Enjoy. There are few restrictions here and there, but take full credit. So when credits were not allowed, it resulted in cascading effect. What is cascading effect? Tax on tax. If I am purchasing an item for 100 plus 10, if I am not allowed the credit, what is my cost? If I am purchasing an item plus for 100 rupees plus 10 rupees taxes, if I am not given the credit, what is my cost? 110. When I sell it, what is my selling price? 110 plus my profit. So on the output tax, supposing my profit is 40 rupees. So what is my selling price now? 150. So my output tax will be also on the 10 rupees. Will say we are also on that. Why? I could not take the credit. So tax on tax. It is called as cascading effect. Cascading. But now when you talk about your GST, you get 10 rupees credit. You get, what is your cost now? I purchase a product for 100 rupees plus 10 rupees tax. What is my cost? I pay 110, but what is my cost? My cost is only 100. 10 rupees will go to my balance sheet, current assets. I want a profit of 40. What is my selling price? So now from 150, my selling price becomes, because my profit is the same, So now there's no tax on tax. So it is avoiding cascading effect, mitigating cascading effect, mitigating the cascading effect. Reduction, mitigating means reducing the cascading effect. My cost decreases, my selling price decreases, output tax is lesser and it is not on input tax. My cost reduces, my selling price reduces, my output tax reduces and it is not on my input tax, because my input tax 10 rupees is not my cost, it is my asset, it is my asset, right? So that is the main advantage. Second advantage, it avoids double taxation. On few sectors like restaurant and construction, there was both VAT and service tax, double taxation. Two taxes were there, two indirect taxes were there. VAT was on goods element, service tax was on service element. After GST, there's only GST. So it avoids double taxation. It also avoids multiplicity of taxes. Earlier you had VAT, service tax, your excise duty, central excise duty, state excise duty, octroi duty, entertainment tax, entry tax, etc., etc. Advertisement tax, betting, gambling, lottery tax. Lot of indirect taxes are there. Now majorly it is only, so both are different. Double taxation means one transaction had to pay, for example, restaurant and construction. Now there is only GST. Second part is, earlier there were multiple taxes. VAT, CST, excise duty, central excise duty, state excise duty, your service tax, customs duty, entry tax, octroi duty, advertisement tax, betting tax, gambling tax, lottery tax, etc., etc., etc. Now there is only GST. Now there is only, so there is no double taxation, there is no multiple taxation. There is no multiple taxation. Then, one nation, one market. One nation, earlier when you are purchasing from other state, CST was there, you cannot take the credit. You cannot take the, now if you are purchasing from other state, what is the type of tax? If you are purchasing from Maharashtra to Tamil Nadu, louder, louder, you can take the credit. Earlier from Maharashtra to Tamil Nadu, it was CST, central. Can you take the credit? No one can take the credit. But after GST, Maharashtra to Tamil Nadu, what is the tax? So a purchaser, who are the purchaser? Purchaser is there in Tamil Nadu. Now the Tamil Nadu purchaser can take the credit of IGST. So it is called as unified national market. That is one nation, one market. One nation, previous point, avoiding multiple taxes. One nation, one tax. One nation. See, there is no multiple taxes. There's only GST. There's no VAT. There's no CST. There's no excise duty, central excise duty, state excise duty, octroi duty, entry tax, advertisement tax. There's only GST. One nation, one tax. Now, one nation, one market. One nation, one market. Unified nation market. Other advantages, it will boost Make in India initiative. A lot of foreign companies will be happy to come to India because they are also familiar of GST. In almost 170 odd countries, there's GST. So they are also aware. They'll easily invest in India, which will boost Make in India initiative. Then it is obviously helping in ease of doing business and certainty in tax administration. You're not, whether you're there in 10 states, but you're registered only with GST authorities. You're registered only with GST authorities. You know whether I'm there in Tamil Nadu or Karnataka or Maharashtra, I'm there in 10 states. A company may be there in 10 states, but it can have only one consultant. It can have only, because he knows whether I'm going to file returns in Tamil Nadu or returns in Maharashtra or returns in Karnataka. It's all same. And through a common website, through a common, so that is ease of doing business and easy administration, certainty in tax administration. You have to only reply to these GST departmental officers, whether they are in Tamil Nadu or whether they are in Karnataka or whether they are in Maharashtra or whether they are in Delhi, they all read the same provisions. They all read the, easily you can deal with them. Next, automated procedures with greater use of information technology and easier tax compliance. With use of more and more technology, it is very easy to file your returns. Your return filing now has 2A, 2B, everything is automated. Automatically you'll get 2A, 2B, then from there you can take your input tax credit. It's all, everything is almost automated. Almost, when you're talking about your e-way bill and e-invoice, with the same software, when you're raising the invoice, you can click yes, e-invoice will be generated. You can click yes, e-way bill will be generated. So that is by use of information technology. And finally, benefits to the industry and benefits to SMEs. Why benefits to the industry? When the tax reduces, price will also reduce, consumption will be more and production will be more. So it is beneficial to the industry. Customer will enjoy because lesser price. So it will boost the industry. It will also boost small and medium enterprises. Why? If you are very, very small, you need not take registration. You need not even take. But if you're not very small, you're small, you can go for composition scheme. You can go for. So these are the few advantages of GST. ICA will never ask you to write all the advantages. ICA will ask you to write 2 or 3 advantages. 2 or, and I would always suggest that go for very direct advantages. These are the first 3 direct advantages. Mitigating cascading effect, which means reducing cascading effect, avoiding multiple taxation, avoiding double taxation, one nation, one market, unified nation market. You need not even focus on other advantages. You can focus only on the first 3 or 4 major advantages. Major, sufficient. So you need not even go through all the points. You can go through only first 3 or 4 points. Are you guys clear with this understanding? So this is the advantage of GST. Whenever I have discussed advantages of GST, it was exactly opposite before GST. So I'm not even touching that. These were the issues in old taxation. Here there is no cascading, there was cascading. Here there is no double taxation, there was double taxation. Here there is no multiple taxes, there were multiple taxation. Here it is one nation, one market, there it was one state, one market. If I purchase only from Tamil Nadu, I'll get the credit. If I purchase from Maharashtra, CST, I'll not. So you need not even remember that. So just focus on the initial. I'm not even asking you to go through the later part, etc. part, forget about it. Only focus on the first 3 or 4 major advantages. And even if opposite question comes, you know what are the disadvantages in earlier tax regime. So this will automatically, this is going to automatically cover the main disadvantages. Main, right? So till now, whatever we have discussed was only 3-star. Now comes your 5-star question. Which means whenever they are interested in asking a question from this chapter, they'll always stick to one favorite area. What are the taxes that are subsumed inside GST? What are the taxes that are subsumed? What is the meaning of subsumed? Covered. So all of you now have your material, correct? So material has been given, and I say normally what it does, it tells me that sir, please send the soft copy, we'll give the hard copy to save the cost. But I have said that no, better you take the materials. Maybe whatever amount ICA can charge, they will charge to you. I'm not interested in what is ICA doing with you. The reason is this material is different from, if at all I have given the same material in black and white. Just think of the difference. This material will be looking very different. One thing when I'm discussing it is all color. But the moment you see the material, it would have been black and white. You will not get that feel or that effect. And always your mind is very important. It's all mind game. So when you're going through these materials, you'll find it more comfortable than a black and white text for sure. Right? So wherever I'm discussing 3-star, 5-star, in your text, that area, not entire thing. And the advantages, you need not highlight 3-star for the entire advantages, only first 3 points. Only first 3 points, 3-star, sufficient. So here it is a 5-star question. What are the taxes that are subsumed inside GST? First is central taxes. What are the central taxes that are subsumed? Which means they are gone. They are gone. First is your excise duty, whether it is central excise duty, state excise duty, or excise duty on medicinal and toilet preparation. Same thing, excise duty. You call it as central excise duty, you call it as additional excise duty, you call it as excise duty on medicinal and toilet preparations. Then it is your service tax, which is gone, dead. Then it is your CST, central sales tax, which is gone. So your excise is gone, service tax is gone, CST is gone, customs is not fully gone. Customs is, main customs duty is still there. But customs duty had something called as CVD and special CVD, which is nothing but duplicate of excise and duplicate of VAT. Duplicate of excise and duplicate of whether excise duty is dead or alive. Whether excise duty is dead or alive. Gone. When excise is gone, duplicate of excise is surely. When excise is gone, what is CVD? CVD is nothing but duplicate of excise. What is special CVD? Nothing but duplicate of VAT. So when the main excise is gone, Duplicate of excise is gone. When the main VAT is gone, duplicate of VAT is gone. So earlier your customs would have been your BCD, CVD, which is nothing but duplicate of excise duty, education cess, secondary higher education cess, special CVD, which was nothing but duplicate of VAT. What is now? Customs duty is still there, but now it is BCD. Customs duty is still there, alive. But education cess, secondary education cess, now they are not there. It is replaced by social welfare surcharge. Not because of GST, otherwise. There is no education cess, there is no secondary education cess, there is social welfare surcharge. Social welfare surcharge, which will focus not only on education but also health on and the social fabric, which means the poor people, they will be also getting a help. Right, so it is focusing on multiple things. And your CVD and special CVD is now converted to IGST. So it is not IGST tax, it is customs duty which includes IGST. Basic customs duty plus social welfare surcharge plus IGST. So CVD, special CVD is gone, replaced with GST. Whether customs duty is alive or dead. Loud and clear. Whether customs duty is alive or dead. Alive. The breakup of which is BCD, SWS and IGST portion is within customs duty. IGST portion is within. So customs duty is still alive. Customs duty is still alive. Right. Now what are the central taxes that are subsumed? Excise, service tax, CST, CVD and special CVD. Customs duty is alive, but CVD and special CVD is gone. What are the state taxes that are subsumed? Your VAT or sales tax. Opposite of that was entry tax or purchase tax. Same. On sales, VAT or sales tax. On purchase at times, which we call it as RCM. So it was purchase tax or entry tax. Similar to RCM. Similar to RCM. Then taxes on advertisement, gone. Taxes on betting, gambling, lottery, gone. Now it is only GST. Even on betting, gambling, lottery, GST. Even on advertisement, GST. Luxury tax, gone. There's no luxury tax. When you go and stay in a hotel, there's no luxury tax, gone. Entertainment tax by state government is gone. But entertainment tax by local authority, still there. Entertainment tax by local authority, still very much tax. So entertainment tax by state government is gone, but entertainment tax by local authority, even now on movie tickets, you'll have GST plus also entertainment tax. By whom? Not state government, by local authority. So what are the state taxes that are dead? VAT, sales tax, purchase tax, entry tax, advertisement tax, betting, gambling, lottery tax, luxury tax, entertainment tax by which is dead? Entertainment tax by louder. It is dead. What is alive? Entertainment tax by local authority is still alive. Strictly speaking, these are the only taxes that are converted to GST. Any other indirect tax still alive. Any other indirect tax is only small indirect tax. Say for I'll give you some examples. Air travel tax. When you travel by airline, there's inland travel tax or foreign travel tax along with GST. Still alive. Still alive. Electricity tax. Indirect tax. Still alive. Stamp duty. Immovable property. And registration. Still alive. Still alive. Got that? So please, road tax, motor vehicles. When you purchase motor vehicles, GST will be there. Road tax, still there. Motor vehicle tax, still there. So only these indirect taxes are gone. So what are the central indirect taxes that are gone? Basically only four, though it is multiple points. Excise, CST, service tax and CVD and special CVD portion of customs duty. Customs duty is alive, but CVD and special CVD portion of customs duty is converted to IGST. What about state taxes? VAT, sales tax, purchase tax, entry tax, advertisement, betting, gambling, lottery tax, luxury tax, entertainment tax by state government is gone. So 4 plus 6, totally 10. I am not counting these 3 items as 3 items. I am counting these items as 1 item. So totally 4 central taxes, counting excise as one item, and 6 state taxes are gone. I have not even touched the last point. Last point is time pass. Any cess and surcharge. When these taxes are gone, automatically cess and surcharge on them is gone. Automatically cess and surcharge on them is gone. Are we guys clear with this understanding? So that is a 5-star question when you talk about your first chapter GSA in India, and the last part of this chapter, what are the special items which will have. So this is not 5-star, but it is a 3-star question, special items which are there in your GST. So when you talk about, this is an amendment now. So alcoholic liquor for human consumption. Alcoholic liquor for human consumption is permanently outside GST. Now they have also added one item which is there for first time for September exams. So it was not that till May. First time for September item. Raw material for this alcoholic liquor for human consumption, that is undenatured. Simple meaning raw. Simple meaning is denatured means removing the nature. Undenatured means not removing the nature. Undenatured extra neutral alcohol. Undenatured extra neutral alcohol or rectified spirit which is used for manufacturing alcoholic liquor for human consumption. So it is not only alcoholic liquor for human consumption, it is also undenatured extra neutral alcohol. Undenatured extra neutral alcohol, otherwise called as rectified spirit, which is used in manufacturing alcoholic liquor for human consumption. Both are permanently outside GST. When I tell permanently outside GST, only constitution can bring them inside. Permanently they are outside GST. What is the tax? It is state excise duty and state VAT. So excise duty will also go to state government. VAT or CST will also go to state government. Right? First item. Alcoholic liquor for human consumption and undenatured extra neutral alcohol or rectified spirit which is used in manufacturing alcoholic liquor for human consumption. Permanently outside. Then 5 petroleum products. 5 petroleum products which are petroleum, crude, high speed diesel oil, motor spirit which is commonly called as petrol, natural gas and aviation turbine fuel. 5 notified petroleum products. 5 notified petroleum products. So one is petroleum, one is motor, first is petroleum crude, high speed diesel oil, motor spirit. So 5 items. 5 items. Okay, to make it simple, presently who are the most powerful persons in India? PM, right? And one more powerful person is there, who's always along with PM. So Ministry of Home Affairs. Ministry of, right? Now recall it. First is petroleum crude. Okay, done. M, motor spirit, commonly called as petrol. Right, so PM is done. Then next, I'm sorry, Ministry of Home Affairs. Okay, it's not this way. PM is that, but PM name is, so that way you need to PMN. So it is PM only, but that M is silent. PM, who's that PM? Who's very powerful? Right, and along with that, so PM is petroleum, crude, N is natural gas, M, motor spirit which is commonly called as petrol, H, high speed diesel, A, aviation turbine fuel which is otherwise called as white petrol. Aviation turbine fuel which is otherwise called as white petrol. White petrol which you use in airlines. Petrol, a very high quality of petrol is called as aviation turbine fuel which is white petrol. So very simple to remember. 2 most powerful persons. PM, that is N, and so you are talking about another person, Amit Shah, which is having control over Ministry of Home Affairs. Ministry of, very, very simple way to remove these 5 notified petroleum products. These are temporarily outside. Temporarily they are outside. Temporarily. So till they are notified by GST Council. Till they are notified by GST Council, they are outside GST. Till they are notified by GST Council, they are outside GST. What is the tax on them? It is not state excise duty, it is central excise duty, which is collected by central government only, and VAT CST, which is by state government. Liquor, state excise duty, state government. VAT CST, state government. Petroleum products, central excise duty, central government. VAT CST, state government. Other special items, tobacco and tobacco products. They are inside as well as outside GST. Tobacco and tobacco products. So for that, it will be central excise duty and GST. Central excise duty fully to central government. So it is inside only GST, but in addition to GST, there will be central excise duty. Central excise duty and so outside is only two, petroleum products and liquor products. Now it is all inside. Tobacco is inside, but it will have central excise duty and GST. Central excise duty to central government, GST between center and state. Between center and state. Shared by center and state. Likewise, one item which is for only state. Opium, Indian hemp, narcotics and narcotic drugs. Opium, Indian hemp, narcotics and narcotic drugs. That is exactly ulta. One is state excise duty fully to state government. GST shared between center and state. GST shared between, right, tobacco products, central excise duty fully to center. No VAT CST. No VAT CST. GST between center and state. Opium, Indian hemp, narcotic drugs, state excise duty only to state government. GST shared between center and state. These are 4 special items. And they don't, ICA doesn't touch the last 2 items in general. ICA's focus is on alcoholic products. Now it is not 1 item, 2 items because raw materials also included, and 5 petroleum products. 5 petroleum products. You're talking about alcoholic products and 5 petroleum products. Are you guys clear with this understanding? Right, special products. So this completes our discussion of your first chapter, 3 stars and 5 stars. What are the important areas of your GST in India? GST in, rather we have covered in such a way that your basic revision is also done about your GST. Now, talking about your next chapter. What is your next chapter? Your next chapter is levy of GST. Levy of GST. When you talk about your levy of GST, we'll be focusing again on 3 stars and your 5 stars so that things are very, very simple and clear. Now, focusing on a levy of GST, every chapter first page will be a bird's eye view. So quickly going through a bird's eye view, section 1 is your applicability. Entire India including Jammu and Kashmir. Entire India. GST Act is applicable entire India including the state of Jammu and Kashmir. Now your charging section is section 9. Section of CGST Act read along with section 5 of your IGST Act. So you focus only on 9 of CGST Act. All the sections that we are going to discuss is only CGST Act, section 9 of CGST Act. Now, for your charging section, there are totally 6 P's, out of which first 3 main P's are product, process, place. Product, what is the product? Goods and services. Goods is movable, services, anything which is not goods. Goods is movable, services, anything which is not movable, which means anything other than goods. Anything other than goods, product, process, supply, process, supply, whether it is supply or not, whether it is supply or not. Main thing will be focusing on your supply. Place, intrastate or interstate, intrastate or whether it is same state or other state. Intrastate means what? Tamil Nadu to Tamil Nadu. Loud and clear. So CGST, Tamil Nadu, SGST. Maharashtra to Maharashtra. Loud and clear. CGST plus, don't say SGST. Maharashtra, SGST. Delhi to Delhi. So what is the answer? CGST plus Delhi, SGST. CGST plus Delhi to West Bengal. Delhi to West Bengal. Louder. So what is the type of tax? IGST. IGST. So when I tell Tamil Nadu to Tamil Nadu, CGST plus Tamil Nadu SGST, CGST will go to central government and Tamil Nadu SGST will go to Tamil Nadu state. Maharashtra to Maharashtra, CGST plus Maharashtra SGST, CGST will go to central government, Maharashtra SGST will go to Maharashtra state. Correct? Delhi to Delhi, CGST will go to central government and Delhi SGST will go to Delhi state. Delhi to West Bengal. To whom? No. Central government will collect as a custodian. IGST is not central government. IGST will first go to central government as a custodian. 50% will be taken by central government. 50% will be given to which state? Delhi or West Bengal? Delhi or West Bengal? Loud and clear. Why? Destination based consumption tax. Destination based consumption tax. Destination based. So your GST is dash. Dash tax. Destination based. IGST belongs to whom? IGST will be collected by whom? Loud and clear. Loud and clear. But final sharing will be between whom? 50% central government. 50% destination state. 50%. So in our example, Delhi to West Bengal, IGST first will be collected by central government. 50% it will have it. 50% will be given to dash state. West Bengal state. MCQs. Clear? Clear? Now that you know the answer, you can easily go through MCQs. Otherwise, every answer will be right answer. You will see at every answer it will attract you like that is the right answer. So I am introducing GST now as a destination based consumption tax by taking interstate or intrastate. Your interstate or intrastate will be asked as a generally separate question for 3 marks when we are going to discuss tomorrow the end part, your IGST Act. Your IGST Act, whether it is interstate or intrastate. Section 7 to section 9 of your IGST Act. Interstate or intrastate. So when you talk about your interstate or intrastate, this will be a separate chapter by itself. This will be a separate chapter by itself. Now in a simple example, we have answered whether it is CGST, SGST or IGST. But to find out place of supply is a separate chapter. To find out, see, I said Tamil Nadu to Tamil Nadu. What does it mean when I tell Tamil Nadu to Tamil Nadu? When I tell Tamil Nadu to Tamil Nadu, it means location of supplier, Tamil Nadu, place of supply, Tamil Nadu. When I tell Maharashtra to Maharashtra, what does I mean? Location of supplier, Maharashtra, place of supply, Maharashtra. When I said Delhi, Delhi, what does it mean? Location of supplier, Delhi, place of supply, Delhi. When I said Delhi, West Bengal, what does that mean? Location of supplier, Delhi, place of supply. So for all these things, you need to find place of supply. You need to find, which is a short question for 3 to 5 marks. 3 to 4 marks, short question. That will be discussed in your section 10. How to find out place of supply for goods. Section 12. How to find out place of supply for your services. The only chapter where I will be referring IGST Act. The only chapter where I will be referring everything else till tomorrow end discussion will be referring only to simple, right? So in this chapter, 3 P's: product, process, place. Read it ulta now. Read it reverse. Interstate supply of goods and services. Intrastate supply of goods and services. Interstate supply of goods and services. Intrastate supply of goods and services. So if you read it ulta, you'll find okay, product, process and place. Place, rough discussion we have done. Detailed discussion will be there in your IGST Act. Product we know. Goods means movable and service other than. One more thing you need to remember, when you talk about money and securities, it is neither goods nor services. Neither goods, so that is sufficient. Neither goods nor services. Goods is movable, services other than goods. Second thing to remember, both goods and services will not include money and securities. Money and, so money is neither goods nor services, securities is neither goods. So this area we have roughly discussed. Your place and some discussion will be there in your IGST Act. Product we have discussed, goods and services. I am not going in depth of the definition of goods and services, not asked. So do we have a detailed discussion of that? Yes, we do have a detailed discussion of that. That what do you mean by India? What do you mean by state? What do you mean by union territory? What do you mean by your goods? What do you mean by your service? Etc. etc. Is it relevant for exams? So what is our target in these 2 days? 5-star and 3-star. So just remember basic thing. Goods, movable, service, anything other than goods. Both goods and service will not include money, will not include securities, will not include securities. Are you guys clear with this understanding? Now, one question for your MCQ which may come. How many states are there? So only I am highlighting only this area. How many states are there? Normally 28. For GSC it is 28 plus 3. 3 are DPJ. Remember APJ Abdul Kalam? DPJ. Delhi, Pondicherry and Jammu and Kashmir. Delhi, Pondicherry and Jammu and Kashmir. So remember your DPJ, Delhi, Pondicherry and Jammu, they are treated as states. So totally 31. So if it is Jammu to Jammu, CGST plus Jammu SGST. CGST plus, what if it is balance union? How many union territories are there in total? 8. But remove 3. Delhi, Puducherry and Jammu. What are the balance union territories? Andaman, Nicobar, Lakshadweep, Daman, Diu, Dadar and Nagar Haveli. Earlier were different, but now they are merged. So Dadar and Nagar Haveli and Daman and Diu are 1. Then Ladakh, then Chandigarh. Balance 3 are also union territories, DPJ, but they are treated as states. So if I tell Andaman Nicobar to Andaman Nicobar, it is CGST plus UTGST. CGST plus UTGST. Sir, you have not said Andaman UTGST because UTGST Act is the same. If I were telling SGST in Delhi, I used to tell CGST plus Delhi SGST. Maharashtra, CGST plus Maharashtra SGST. But Andaman Nicobar to Andaman Nicobar, I am referring CGST plus. Why? Because Union Territory GST Act is only one. For all these 5 union territories, there is only one act, UTGST Act. But for Tamil Nadu, you have Tamil Nadu SGST Act. Maharashtra, Maharashtra SGST Act. Delhi, Delhi SGST Act. Pondicherry, Pondicherry SGST Act. Karnataka, Karnataka SGST Act. West Bengal, West Bengal SGST Act. Clear? Clear? So that is a very simple analysis 3-star question for your MCQs. For your MCQs. So 31, don't remember 31, 28 plus 3. So you remember actual states plus for GST. Union territory, don't remember as 5. 8 minus 3. 8 minus 3. Right. So that was an area which you could refer. Now you know that you have IGST Act, which is not there. It is by only Parliament. Your state legislature will not worry because IGST Act, important decisions are there. About place of supply, only Parliament will decide. CGST Act, Parliament will decide. SGST Act, there are how many SGST Act? 31 SGST Act. How many SGST Act? 31 SGST Act. Who will frame it? Legislature of states. Who will frame it? Legislature of states. So how many SGST acts are there? 31. And how many UTGST act is there? 1. How many CGST act? 1. IGST act? IGST act, Parliament. CGST act? Parliament. IGST act, states are not allowed. Only Parliament will decide because important matters. How to distribute IGST and what is the place of supply. Only two things. How to distribute IGST, not in your inter syllabus, and what is the place of supply. Partly it is there in your syllabus. Only two things. CGST Act, we are discussing by Parliament. SGST Act, 31 SGST Act, copy paste only, the names will change. Otherwise, it is conceptually the same. And UTGST Act, conceptually the same, but only one UTGST Act. Difference is 31 SGST Act are passed by legislature of states, but UTGST Act, they don't have a assembly, Parliament will help. Parliament will help. So that was only for your MCQs, not otherwise. Only and only for your MCQs. Now, the core area of this entire chapter is your supply. Is your supply. So whatever I was about to write is already there. So it is only easy to focus on the important areas. Supply is equal to actual supply plus deemed supply minus not supply. So supply entirely is 5-star. So entire supply, which we are going to discuss now, there is a short question. 200% assurance that there will be a question. There will be surely a question on supply. Maybe out of 4 attempts or 5 attempts, one time I say will skip it. Rarely. Otherwise, they will give a question. From the following activities, determine whether they are supply or not. Right? They will give that. Sure, that's a question. Otherwise, normally a separate question. At times, they will merge it along with the bigger question. But sure, that's a question. 5-star. Supply is equal to actual supply. Part 1, part 2, that is section 71A, section 71AA. Deemed supply. Again 2 parts, 71B and 71C. Not supply. Again 2 parts, 72A and 72B. Actual supply, 2 parts. Deemed supply, 2 parts. Not supply, 2 parts. Only and only if it is supply. You will focus on nature of supply, which is given in 71 capital A and 73. 73 is not allowed because not notified. So here, what is step 1? Step number 1 is finding out whether it is supply or not. Actual supply, 2 parts. Deemed supply, 2 parts. Minus not supply, 2 parts. If it is not supply, even don't come to next step. Only if it is actual supply or deemed supply. Actual supply plus deemed supply minus not supply. Actual supply 2 parts, deemed supply 2 parts, not supply 2 parts. If at all it is not supply, don't even come here. Step 2 is relevant only if it is actual supply or deemed supply to find out whether it is supply of goods or supply of services. Supply of nature of supply. You come to second step only when it is supply. If at all it is supply, whether it is supply of goods or supply of services will be addressed by nature of supply. If you are very lucky, ICA will not ask complicated questions of deemed supply, not supply. They will tell out of the following 4 cases, tell whether it is supply of goods or supply of super lucky. Supply of goods or supply of super duper lucky means you will be getting a question where it will forget about the complications of supply. It will focus only on which area? Whether it is supply of goods or supply of services. Whether it is supply of goods or supply of services. Only that particular area it will focus. Super duper lucky. Why I am telling super duper lucky? Nature of supply is addressed by schedule 2. Your nature of supply is addressed by schedule 2. Actual supply, there is no schedule. Deemed supply, there is one schedule. Schedule 1. Deemed supply, there is out of 2 parts. In 1 part there is schedule 1. And not supply, out of 2 parts, 1 part is there is schedule 3. What is the most simple thing is schedule 2. Schedule 1, 4 paras. You have to remember what are the 4 paras. Schedule 3, totally there were initially 6 paras, then it is 8, but for inter it is only 6. Now it has become 10. Another amendment. So now you have to remember 8. Totally 10. But for inter, 8. For inter, 7th and 8th para not relevant. But 9th and 10th para is relevant. So totally now it is for the first time. When I am telling for the first time, high possibility that amendments will be asked. For the first time, already one point was already discussed. What was that? Alcoholic liquor for human consumption was permanently outside GST. Now, undenatured extra neutral alcohol or rectified spirit is also permanently outside GST, which is used for manufacturing alcoholic liquor for human consumption. So your question amendments. So we'll be incorporating them. First time is very important. It was not that till May exams. It is from September 25, Jan 26 exams. It is very much there. Right. So what we will do is, you know the two steps. Step number 1 is supply. Supply is equal to actual supply, 2 parts. Deemed supply, 2 parts. One of the part is schedule 1. Not supply, 2 parts. One of the part is schedule 3. Once it is supply, you decide nature of supply, which is schedule 2. Which is schedule, which is, you need not remember the paras because they are only examples. They are only examples. So what I will do directly is, first will not see supply. First will complete very simple area. Again, which is again, this entire supply is 5 star only. So write 5 star for entire supply. 5 star for entire supply. So first what I will do is, I will take your nature of supply and I'll make it very simple. So we are assuming that it is supply. When I'm going to nature of supply, I'm going to discuss step 1 or step 2. Step 1 or step 2. Which means by default it is either actual supply or if it is supply, come to step 2. If it is not supply, don't come to step 2. If it is not supply, don't come to. I will not even take any of the paras of your schedule 2. I'll simplify it. Now I'll just, before I start, I'll give an example to make you understand one important thing. Because you'll use the words otherwise. Motor vehicles, what it is? Loud and clear. Loud and clear. Motor vehicle is fine. Sale of motor vehicle. Sale of motor vehicle. Don't tell goods now. You know why I'm telling this? Sale of motor vehicle. Do not tell goods. Sale of motor vehicle is louder. Renting of the same motor vehicle. Renting of the same motor vehicle. Product was goods. Motor vehicle was goods. Sale of motor vehicles is supply of goods. When you are booking red taxi, it is motor vehicle goods, but it is supply of services. Ola, Uber. Got that. Motor vehicle is goods. Do not tell supply of motor vehicle. Item is product is goods. Sale of motor vehicles, supply of goods. Renting of motor vehicle is supply of services. Are you guys clear? Please do not replace. If the question is goods, please stick to goods. Now we are talking about goods or supply of goods, supply of services. Our focus is goods, services or supply of goods, supply of services. What is goods? Anything movable is goods. What is service? Other than goods, which is not movable. Coaching class. Coaching class. Giving coaching. Giving coaching. Coaching class. Coaching is giving coaching. That. Got that? Are you guys clear with this understanding? Motor vehicle, goods. Sale of motor vehicle. Renting of motor vehicle. Hiring of motor vehicle. Leasing of motor vehicle. Got that? So be very clear with that. Do not confuse. Now if you know that, my job is very simple. Now, if at all, an item is goods, an item is product is goods, product is goods, and title is given. Title is given means what? Ownership is given. Ownership is given. It is supply of. So in schedule 2, there are few examples. Right? Motor vehicle is goods, title is given. That's only one example. Title is given. Goods, title is given. It is supply of Because it is sale of goods. It is sale of goods. Title is given. Title is given. If the same motor vehicle, title was not given. If the same motor vehicle, title was not given. Supply of, hiring of motor vehicle, leasing of motor vehicle, renting of motor vehicle. But what if there is hire purchase of motor vehicles? What is hire purchase of motor vehicles? Whether it is sale or whether it is hire purchase, one thing is very simple. Title will be, so sale title is transferred immediately. Hire purchase title will be transferred at the time of last installment. Title will be transferred at the time of, so ICA's favorite question, hire purchase. Whether title is given, yes. It is not given now, but it will be given at the payment of last installment. So sale of motor vehicle, loud and clear. Hiring of motor vehicle, renting of motor vehicle, supply of services. Leasing of motor vehicle, supply of services. Hire purchase of motor vehicle, supply of, title is not transferred now, but it will be transferred later in future. In future. So supply of goods. Clear? But what if I tell product itself is service? If the product itself is service, coaching, giving coaching class, chartered accountant, which sector? So CA giving services to its clients, engineer, so it's service sector, engineer giving services to his clients. Clear? Clear? If the product itself is service, but obviously it is supply of service, but obviously it is supply of. So what if the product is goods plus service, which happens in restaurant sector and outdoor catering sector? If at all you go to Annapurna and have an idli or dosa or even coffee for that matter, there is goods and, but what is the dominant nature? Why you go to Annapurna? Food. Essentially you are appreciating what? If I just give a idli which is like a rubber ball. If I give a idli which is like a, you can play with it. So you are going for that idli, right? I'll give you idli, but it is a rubber ball. Will you appreciate it? No. So you're going there for, what is the dominant nature? Dominant nature is not goods, it is the service. If at all you don't like something, what do you tell to the restaurant owner? Your service is not good. And restaurant is always service sector. It's always service sector. At times you feel very much privileged. If at all you go to certain restaurants, say for example Annam restaurant, and waiters there are giving you due respect like your family members. What do you tell? Appreciate that. You might like the food, okay, but the service was so good. Right? It is a service sector. So restaurant, outdoor catering, goods and service both are involved. But what is dominant there? Value-wise goods will be higher. Value-wise goods is higher. But you're not going for the value, you're going for the service element. You're going for the, why you pay more in Taj? The same coffee you can get it in Valen Coffee. Why you pay Taj 500 rupees for a coffee or Cafe Day 300 rupees for a coffee, where you can get in Valen Coffee 30-35 rupees. Goods is the same. You go there for service sector. Restaurant, outdoor catering, goods and services are involved, but dominant nature is service. Likewise, construction, works contract. Construction of a building, erection, installation, commissioning of a plant and machinery which is immovable. Construction of a building, this property, or erection, installation, commissioning of a big plant and machinery. So, when you are constructing it, this building, goods are involved, cement, sand, bricks, water, iron and steel, right? Labor is also involved. Value-wise goods is big. But what is the dominant thing that you expect from a builder? If at all you ask any person who is going to purchase a flat or a shop, what are they expecting there? Service. Dominant thing is, so you might pay 11,000 per square feet for a property, where otherwise another person is giving for 7,000, but you will still go for 11,000 per square feet. Why? Service. High class services. Are we guys clear with that? So even in your construction or erection, installation, commissioning, there is goods plus, but what is the dominant nature? So when you talk about construction of a building, supply of works contract of a building, both goods and services are given together. Erection, installation, commissioning of a plant and machinery, food, restaurant, outdoor catering, they will come to your place. Everything is supply of service. And immobile property. When you talk about your immobile property, what it is? Neither goods nor services. Technically, immobile property is neither supply of goods nor supply of services. Schedule 3. Sale of land and building is neither supply of goods nor, but we are not talking about sale. If it is sale of land and building, it is neither supply of goods nor supply of services. Schedule 3. We are not talking about sale. We are talking about renting. We are not talking about sale. Here we are talking about renting. So here we are talking about renting or leasing of immobile property. So why are we not talking about sale? Because sale of immobile property is neither supply of goods nor, if it is not supply, don't come to schedule 2. If it is not supply, don't come to step number 2 is nature of supply. If sale of land and sale of building is not at all supply, sale of land and sale of building, you'll see in schedule 3, it is not at all. You will not even come to nature of supply, schedule 2. So when you are talking about immobile property, we are not talking about sale of immobile property. We are talking about leasing of immobile property or renting of immobile property or license of immobile property or long-term lease of immobile property. 99 years lease of immobile property. We are talking about other than sale. So why is it other than sale? Because sale of immobile property is neither supply of goods nor supply of services. Neither supply of goods nor supply of services. So here I have written, for goods I wrote sale as well as renting. Title is transferred, title is not. But for immobile property, I am assuming that it is not sale. I am assuming it is not. So why I am assuming it is not sale? If it is sale of immobile property, it is neither supply of goods nor supply of services. I will not even come to schedule 2. So sale of immobile property. Answer. Give me an answer. Sale of immobile property. Not supply. Sale of immobile property. Renting of immobile property. Louder. Supply of services. Supply of. This is your summary of schedule 2. You need not remember the items in schedule 2 because they are only examples. Unlike schedule 1 and schedule 3, they are only. How to remember schedule 2? Simple. Goods, title is transferred. It is supply of goods. Everything else is supply of services. Goods, title not transferred, supply of services. Service, always supply of services. Goods plus service. Restaurant, outdoor catering, construction works contract or erection, installation, commissioning of a plant and machinery. Both goods and services are involved. Supply of services. Only immobile property. Other than sale. Everything else is supply of service. Everything else is supply of service. One way, you go through each item and remember para 1, supply of goods, para 2. They are not expecting you to do so. Any I say question about nature of supply, you know the answer. Any I say, without even touching schedule 2, you know the answer. How? This simple chart. This simple chart where you are talking about when it is supply of goods and when it is supply of services. So when you talk about entire supply, what I said? 5 star. Entire supply is short question will be there. And supply is split into 2 parts. What is first? Supply, then nature of supply. Supply, then we have seen second part. Nature of supply. Nature of, you are prepared for any question of ICA with respect to nature of supply. Now we will see the first part. When you talk about first part, how to remember the first part? You are talking about actual supply plus deemed supply minus not supply. Correct? Actual supply 2 parts plus deemed supply 2 parts minus not supply 2 parts. Correct? Now what is actual supply 2 parts? Actual supply, both the parts will have certain things in common. There should be an activity. Which activity? Which activity? Any activity, any form. Activity can be any activity. Activity can be any activity. It should be in course of furtherance of business. And it should be for a ABC. ABC. Any activity in course of furtherance of business for a consideration. A, B and C. So this is actual supply first part. Any activity, it should be in course of furtherance of business. It should be for a consideration. It should be in course of furtherance of business. It should be for a consideration. Now, your deemed supply, sorry, not deemed supply, actual supply part 2. That also talks about any activity. It also talks about any activity. Business also is silently present here. So for business, in course of furtherance of business, it should be for a. So when you talk about actual supply part 1, it is any activity in course of furtherance of business for a consideration. Part 2 is also any activity in course of furtherance of business for a. Then what is the difference? Actual supply part 1 talks about any activity in course or furtherance of for a business for a consideration by any person to any person. By any person to any person. AP is any person to any person. But when you talk about actual supply part 2, it is by a club or association. It is by a club or unincorporated club or association to its members. To its members. So when you talk about actual supply part 1, A, B, C, it focuses on whether it is actual supply part 1 or actual supply part 2, any activity in course of furtherance of business for a consideration, everything is satisfied. But actual supply part 1 is any person to, any person to, any person to. It is wide enough to include clubs to members. It is wide enough to include clubs to. Actual supply part 2 is a subset of actual supply part 1. Actual supply part 2. You will see the chart. It is a subset of actual supply. So, when any person to any person is given, it will include by clubs to members or by association to. It is given specifically to tell that they are not the same. It is a clarification to overrule a Supreme Court judgment. A Supreme Court judgment said that clubs and members are the same person. Clubs and members are the. So, the second part is given only to focus on the fact that clubs and members are separate person. Clubs and members are, they shall be deemed to be. They shall be deemed to be. So the focus is on they shall be deemed to be. So they are giving this to treat them as separate person. To treat them as. So this is given to clarify that they are not the same persons. They are. Otherwise, deemed supply part 1 is wide enough to cover deemed supply part 2. Part 2 is only clarifying that clubs and members or association and members are not the same, they are separate members. They are separate members. Clear? So that is your actual supply. That is your actual supply part 1 and part 2. What do you mean by consideration? Can consideration be only monetary? No, it can be monetary, non-monetary, given for an activity done or promising not to do an act. For an activity done or promising not to do an act. Monetary or non-monetary, given by a recipient or anyone else. Need not be paid by recipient, it can be paid by third person. For your coaching class services here, you need not pay the amount, your friend can pay the amount. It can be for an activity or promising not to do an activity. For monetary or other than monetary, given by recipient or anyone else. Recipient or 3 simple points of consideration. 3 simple points of consideration. One simple question, whether advance will be included in consideration. Yes, supposing this coaching class is going to cost you say 10,000. If you are paying 1,000 advance, what is the total consideration? 10,000. 1,000 advance, 9,000 paid later. So what is your total consideration? Advance is part of consideration. Whether deposit is included in consideration. Deposit is for security purposes. You will pay deposit of say 10,000 rupees in ICI, supposing for attending classes, as sitting in libraries, etc. Once the services are done, he will get the refund of deposit. He will get the refund of, and deposit is not part of consideration. Deposit is not part of advance, part of consideration. So if I tell advance, it means 1,000 you're paying now, 9,000 you'll pay later. Total consideration is 10,000. Deposit is for security purposes. You pay deposit for getting your telephone line. 5,000 deposit to BSNL. That will be refunded when you disconnect the line. It will be refunded. Deposit is not part of consideration. That is a simple way of consideration. Business. Business, there are a lot of points. 2 plus 2 plus 5. 5 are specific. Forget about 5. 2 plus 2 you need to remember. Very simple question. Answer it very clearly. Charitable trust registered under 12AA or 12AB of Income Tax Act is selling goods. Is selling goods, say Vibhuti or Prasadam or items for prayers. Whether it will have GST, whether it is in course of furtherance of business. A charitable trust registered under 12AA or 12AB of your Income Tax Act is selling goods. Prasadam or say certain books, spiritual books or certain spiritual clothes. Is it doing business? Whether there's an activity, yes. Sale. For consideration, yes. Is it doing business? Yes. Business. Whether or not your intention is profit, it is doing business. Whether or not for pecuniary benefits. Whether or not for. So when you talk about business, whether or not for pecuniary benefits, it may be for profit or it may be for without profit. Whether or not for pecuniary benefits. Intention to earn profit is not relevant. A motor vehicle company is selling motor vehicles, also selling helmets. Whether helmets also is business? Yes. Whether it is main activity or incidental or ancillary activity. Main activity of the motor vehicle company is motor vehicles. But incidental or ancillary sale of helmets or sale of spare parts. That is also business. That is also business. So that is definition of business. That is definition of first two parts. Next two part is clarification. Your frequency, volume, regularity, continuity is not relevant. I may be taking coaching class regularly, or I may be taking coaching class once in 6 months. But that is my business. So your continuity, regularity, frequency, volume, not relevant. Not relevant. I may be selling 1 unit of a product, 100 units of a product, 1 lakh units of a product. It is business. It is business. Then second, even sale of capital goods is business. Supposing for my coaching class services, I require a lot of setups, right? Projector, this camera, phone, systems, lights, correct? After some time, they may become old. I may sell them and get new. Sale of these capital goods will also attract GST. My main business is not selling this system or camera or mic, but that is also part of business. So sale of capital goods also attracts GST. So definition of business is 2 points. Whether or not for pecuniary benefits, incidental, ancillary. Clarification, continuity, regularity, frequency, volume, not relevant. Even sale of capital goods is part of business. Is part of business. Right? One last question to close this business. Your mom selling gold, or you are selling your bike or a phone. Is it business? No. So it is not even covered by your trade, commerce, profession, vocation, manufacture, etc., etc. You should be first covered. You should be first covered. So when your mom is selling gold, or you as a student are selling your bike and getting new bike, or selling a phone and getting new phone, it is not business. It is not. There is a sale activity, yes. Consideration, yes. But it is not in course of furtherance of business. But the person who has taken gold from your mom, or taken that second-hand bike from you, or second-hand phone from you, you're talking about jewelry shop, second-hand two-wheeler showroom, and second-hand mobile phone showroom. When they sell it further, Why? Sale activity. Consideration will be there when selling further. That is in course or furtherance of their business. When you sell to them, no GST. But when they sell it further, business. Because business will be incorporated there. Clear? Clear? So that also ICA touches few times whether it is business or not. So that's the question of ICA. Manikanika is selling her jewelry for getting some funds for his son's wedding. Whether that attracts GST? No. Why? There is an activity for a consideration, but it is not in course of furtherance of a business. Therefore, it is not supply. For supply to be there, A, B, C should be there. A, B, C, activity is there, consideration is there, but business is not there. Business is not there. So we are done with actual supply, 2 parts. Actual supply, 2 parts. Now we are focusing on deemed supply, 2 parts. See, we are discussing supply, which is a core very important area of your GST. Short question will be there. Supply, first we discuss second part, nature of supply. Done. Now we are discussing first part. Actual supply plus deemed supply minus not supply. So now we are discussing your deemed supply. Deemed supply is 2 parts. Part 1. Activity is only importation of services. Activity is only importation of services. So your activity now is importation of services. Business may or may not be there. Business may or may not be there. Activity is not any activity. Importation of service. Business may or may not be there. So business mainly not there. And consideration is there. So activity is the importation of services. Business generally may or may not be, focus is more or not be there. Consideration is there. What about part 2? Activity is not any activity. Activity is schedule 1 activity. Activity is 4 activities of schedule 1. Business is in silently there. Though not specifically one, if you see all the 4 paras, business is silently there. And consideration, not there. Consideration, not there. So if you look at these things, either B is absent or C is absent. In first part, B is absent. In second part, C is absent. In first part, B is absent. In second part, C. Only if it is not actual supply, you will come to deemed supply. Only if it is not actual supply, you will come to. So either B is absent or C is absent. First part, importation of services. You have to remember where B is absent, where C is absent. Importation of services, B is absent, consideration is there. Activity, importation of services. B is absent, but consideration is there. Business is absent, but consideration is there. Second part, schedule 1 4 activities. Business is present, but consideration is absent. Other name of schedule 1 is supply without consideration. Supply without. So C is absent. C is absent. Now when you talk about your importation of services, which is, I have already said it is 5-star. Already the entire supply is, I don't know how to differentiate it, but if at all I want to differentiate it more, I will tell super 5-star. I'll use it as super 5-star. Why? Within the supply which is 5-star, for sure that will be a question. I say its favorite part is importation of service. Why? I'll tell you. If at all there is an importation of service, I am merging both. That is importation of service. Without business. But there is consideration. Business is absent, but consideration is present. It is deemed supply. Part 1. You cannot write part 1, it is section actually 7(1)(b). You need not remember that, you just remember section 7. Section 7. Supply is all defined in section 7. But when you talk about deemed supply, part 2, schedule on 4 activities. Out of fourth activity is importation of service again. 4th activity is. So, there business is present. Consideration is ulta. Part 1, business is absent, consideration is present. Part 2, business is present, consideration is, but they tell that no, by default it will not become deemed supply. That's an extra condition. What is the extra condition? It should be from a related person or branch office or establishment outside India. It should be from a related person or branch office or establishment outside India. Are you guys clear with this understanding? So here, for the second part, they expect an extra condition. They expect an extra condition. If at all business is absent, consideration is present, forget about extra condition. There's no extra condition. There's no extra condition. It is deemed supply. It is deemed supply. But if ulta, business is present, consideration is absent, there should be an extra condition. It should be from a related person or branch outside India, establishment outside India. Only then it will be deemed supply as per this deemed supply as per para 4 of schedule 1. Para 4 of schedule 1. Clear? Clear? Now look at this example and tell me what is the answer. Lakshman, who's there in London. Lakshman, who's sitting there in London, is giving legal services. Lakshman, who's there in London, is giving legal services to his brother Ram, who's there in India. IND is India. This is London, India. What services is giving? Legal services. Related to what? To a business dispute. To a business dispute. Ram is a well-known businessman in India. He's having some business dispute. And Lakshman is a well-known advocate in London. He's giving some advice how to go ahead with this case. But this advice is given free. Louder. Loud and clear. Loud and clear. Sutta. First, is there importation of service? Is there importation of service? Yes, there is importation of service. You will understand why ICA loves it. Is there business? Yes, it is in course of others of business. You are now, normally you look at GST from supplier's point of view. But whenever it is RCM, this is an RCM case. Supplier outside India, recipient in India, RCM case. Ram will pay. Whenever there is an RCM, you look from recipient's point of view. So is it business for Ram? Yes, this is a business dispute. This is a in course or furtherance of business. Whether consideration is there? When business is present and consideration is absent, you require an extra condition. What is that? Related person or establishment outside India. Ram and Lakshman, though they are brothers, they are not related. Because related person includes members of the same family, but that family definition is given where family is said to include spouse, children unconditionally. No condition. But if it is brothers, sisters, parents, grandparents, only if they are. I said Lakshman, well-known advocate, London. Ram, well-known businessman in India. Dependent or independent? So whether they are members of the same family or not members of the same family. They are not members of the same family. If they are not members of the same family, they are not. Why ICA loves this? Because of this. They play with this. If I change the question and I tell that it is not Lakshman in London, it is Sita, wife of Ram in London. Well-known advocate. Sita, wife of Ram, sitting in London. Why? For spouse and children, whether they are dependent or independent, members of the same family. For spouse and children, whether they are dependent or independent, members of the same family. But for parents, grandparents, brothers and sisters, only if they are wholly or mainly dependent. Got that? So the answer that you were very sure of suddenly is changed, and what do you find? Is it supply or not supply? It is not supply. So initially you thought it is supply. Why it is not supply? Importation of service, when B is present and C is absent, that is an extra condition. If at all it was reverse, B is absent, C is present, you don't even check whether related or not. It is by default deemed supply. But if B is present and C is absent. There's an extra condition. What is that extra condition? Related person or establishment outside India. In this case, Lakshman and Ram, though they are own brothers, they are not related person because they are independent. They are not members of the same family. They are not members of the same family. Are you guys clear with this understanding? Are you guys clear with this understanding? So that was an area which is repeatedly touched by ICI. Are you guys clear with this understanding? Can you tell me cases where importation of services is not at all a supply? Two cases. First case is this, where there is an importation of service for business without consideration, but not from related person or branch outside India, it is not a supply. Second, where there is an importation of service, no business, no consideration. No business, that is also not supply. That is also, so that is about your importation of service. Now, when you talk about deemed supply part 1, over. Rather, when we saw deemed supply part 1, deemed supply part 2, para 4, over. Deemed supply part 2, para 4, over. Out of 4 paras of schedule 1, fourth para is importation of service, over. Now, what are the first 3 paras? First 3 paras is, first is permanent transfer or disposal of business assets on which in all these 4 paras, one thing is very simple. Business is present, but consideration is, it is otherwise called as supply without. So your business is present, but consideration is absent. Your business is present, but your consideration is absent. Right. So first point is gifts and free samples. Gifts and, so very simple thing. If at all, I am giving gifts. VJ Limited is giving gifts. I am giving gifts to all of you. Obviously, I should have purchased. If at the time of purchase, I took ITC. When I am giving gifts, I have to pay output tax. If at the time of purchase, I did not take ITC or I took ITC but reversed it. But when I am giving you gifts, I need not pay output tax. First was deemed supply. What is the term? Permanent transfer or disposal of business assets, which means gifts or free samples on which if I take ITC, it is deemed supply, I have to pay output tax. So in the first case, it is deemed supply. In the second case, it is not deemed supply. Why? I did not take ITC. Or I took it but reversed it. Over. That is your para 1. What is para 2? Supply between related person or distinct persons. Obviously, business should be there, consideration is absent. In all the 3 cases, in all the 4 cases, business is present, consideration is absent. Now, if you're talking about supply between related person or distinct person, look at this example. If I am purchasing an item, now whether I take ITC or not is not at all relevant criteria. Now whether I take ITC on my purchase or not is not at all relevant criteria. If I am giving gifts to my related person, gifts of free samples to my, it is deemed supply, because in the first para it is to unrelated person. Now if it is to related person, whether I take ITC or not is not relevant. It is deemed supply. Now I have to pay output tax. If at all I am giving to my branch, distinct person means branch with a separate GST number. So if I am giving to my branch by way of stock transfer, it is generally not by way of gifts. To related person, it is gifts of free samples. To my branch office, I don't give gifts. I cannot give gifts to myself. It is stock transfer. It is stock, but with a separate GST number. I have to pay output tax. Please understand the effect. In para 1, there it was gifts of free samples. In para 2, it is gifts, free samples or branch transfer. Gifts, free samples or first difference. In para 1, that it was about unrelated person. In para 2, it is related person or your own branch with a separate GSC number. More closely related. Your own branch but with a separate. In para 2, they tell that whether you take ITC or not. Whether you take ITC or not relevant. If you have given gifts to your related person, deemed supply. Deemed supply. If you have stock transferred the goods to your branch office with a separate GSC number, with a not same GSC number, with a separate GSC number, it is deemed supply. It is deemed supply. Sir, if I am stock transferring the goods to my branch office with the same GSC number, not supply. It is not. Now it is not distinct person. Now it is not. Distinct person means branch office with a separate GSC number. Branch office with a separate GSC number. Generally, it will happen in other states. Tamil Nadu branch to Karnataka branch. Distinct person. Tamil Nadu branch to Tamil Nadu branch. Same GSC number. Same. Not supply. Not supply. Are we guys clear with this understanding? Are we guys clear with this understanding? So this is an area where you have to be very, 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 very cautious. Para 1, unrelated person, extra condition. ITC should be there. Para 2, related person or distinct person. ITC, whether it is taken or not relevant. Another difference. Para 1, it focuses only and only on goods. Para 2, focuses on both goods and services. Goods and, there is only one exception in para 2. Related person includes employer-employee. Related person includes employer-employee. So if at all I want to consolidate this particular aspect, if at all VJ Limited is giving either gifts or free samples. In case of branch, it is stock transfer. In case of branch, it is stock transfer. So if at all the gifts of free samples or stock transfer is there, if at all it is to unrelated person, if it is to unrelated person, it is deemed supply only if ITC was availed at the time of purchase. It is not supply if ITC was not availed. If ITC was not availed. If it is to related person, it is deemed supply whether ITC is taken or not taken. If it is to related person, in this case I have taken example of say holding company to subsidiary company. If it is to related person, employer to employee. By default, it is deemed supply whether or not ITC is availed or not. So here I am not even focusing on ITC is availed or ITC. It is deemed supply. It is deemed supply. But in one case it is not supply. Normally it is deemed supply. It is not supply if ITC was not availed and the value of the gift is less than 50,000 per employee per year. If the gift value is less than or equal to 50,000 per employee per year. If the gift value is less than or equal to 50,000 per employee per year. There are two kinds of employees. To one employee I am giving 55,000 gift. It is deemed supply. Full value tax. Whether or not ITC is available, not relevant. So another employee I am giving gift 40,000. Assuming that ITC is not availed. Because if ITC was availed, para 1. If ITC was not availed and the gift value is less than or equal to 50,000 per employee per year, not supply. Not. So this exception is not for any related person. It is only for employer-employee. Employer-employee. And finally, if it is to distinct person, obviously branch office. So I'll write it as branch office. If it is a distinct person, which means separate GSC number, then it is deemed supply. It is deemed supply only and only if it is to a distinct person, separate GSC number. separate GST number. It is not supply. If it is not distinct person, which means it is same GST number. Same GST number. So this is a summary of para 1, para 2. To unrelated person, IDC availed, deemed supply. IDC not availed, not deemed supply. To related person, by default, deemed supply. But employer-employee, it is also deemed supply. But one exception. IDC not availed, up to 50,000 per financial year per employee, then not supply. Exception. Exception. To branch office, if it is distinct person, separate GST number, deemed supply. If it is same GST number, not supply. Not supply. So that is para 1 and para 2. Para 3 is talking about special agent. Principal and special agent. Don't call it as agent. Principal and special agent. Special agent means you are talking about agent who is having right to give invoice under his own name. Normally, invoice will not be raised by agent. Invoice is always raised by principal. You are talking about agent, special agent. Who is giving invoice to the customer? Customer will always think that this agent is the owner. But in reality, agent is not the owner. In the eyes of customer, agent will be acting like owner. But in reality, agent is not the owner. So, principal agent, special agent. Only dealing with goods. Para 1, only goods. Para 2, goods and services. Para 3, goods. Para 4, importation of services. So, when you talk about special agent, when you talk about your special agent, this is how your special agent will look like. Normal agent will charge commission, only commission. Actual supply of services on commission, and principal will raise invoice to the customer. Actual supply of goods. So principal will finally raise the invoice to the customer, say for 10 lakhs, actual supply of goods, and agent will charge commission, say for 1 lakh, actual supply of services. Activity, business consideration, everything is there. We are not talking about normal agent who will charge commission and who will not give invoice to the customer. We are talking about whom? Special agent. What special agent will do? Special agent will raise invoice to the customer. Customer will think that agent is the owner. Agent is the... So in that case, when you talk about agent charging 10 lakhs from the customer, it is actual supply of goods. No doubt. He is charging. Activity, sale is there. Business is there. Consideration is there. So when agent is charging 10 lakhs from the customer for sale of goods, he is behaving like owner. It is actual supply of goods. But what when principal is giving the goods? When principal is giving the goods to that agent, in reality there is no ownership transfer. In reality there is no... So there is no actual supply. Consideration is absent. Deemed supply? Yes. Now it is deemed supply of goods. Deemed supply of goods. Why there is no actual supply? Because owner, who is the real owner? When he is giving the goods to agent, it is his goods only. He will not charge anything from the agent. So now it is not actual supply but deemed supply of goods. Don't worry, whenever there is deemed supply by schedule 1 doubt will come. Sir, what about value? Value cannot be 0. So value will be taken by valuation rules. Value will be taken care by, which is not there at interlevel. Which is not there at, just to give an example, valuation I have unwanted, purposefully I have taken it as 8 lakhs. I have not taken it as 9 lakhs. 8 lakhs. Because you know commission in the back end is 1 lakh in the previous example. So 10 lakhs minus 1 lakh, I have purposefully taken 8. It can be any value. It can be, in reality, agent will get commission of 1 lakh. But for GST purposes, he will show purchase of 8 lakhs and sale of 10 lakhs. In his books, it is only commission 1 lakh. But for GST, purchase of 8 lakhs, principal will pay output tax on 8 lakhs, agent will take the input tax credit. And sales of 10 lakhs, agent will pay output tax on 10 lakhs, customer will take the credit. In reality, agent will get commission only of. So books and GST are not friends. Books and GST are not. The books of accounts will show agent only 1 lakh. But GST will show purchase 8, sales 10. Like principal. Principal books will show sale 10 lakhs. In reality, sales of principal is 10 lakhs. This 10 lakhs belongs to whom? Principal. But in GST, it is only 8 lakhs. In GST, it is only books and GST will not be the same. Right? So this is your deemed supply. This is your part 1 and part 2. Part 1 and part 2. And finally, we are talking about your not supply to complete this chapter. Not supply. Not supply is also part 1 and part 2. Part 1 and what we saw, supply, actual supply plus deemed supply minus not supply. Then nature of supply. Supply of goods or supply of services. First we completed nature of supply of goods or supply of services. Then supply, actual supply, both the parts done. Deemed supply, both the parts done. Not supply, first part is very simple. First part is you are talking about 3 activities. 3 activities where you are talking about any conveyance or rigs tools pass on the conveyance. Mainly the conveyance and rigs tools pass on the conveyance. When they are moving from one state to another state, supposing VRL Logistics is taking its truck from one state to another state, it is having branches in both the states. It will be covered by deemed supply. It will be covered by what is para 2 of schedule 1? Supply of goods or services between related person or goods includes capital goods. Goods includes. So truck by VR Logistics sent from one state to another state will have deemed supply. So Tamil Nadu state it has to pay output tax. Karnataka will take credit. Then the truck will come back from Karnataka to Tamil Nadu. Again Karnataka will pay output tax. Tamil Nadu will take credit. It will go like this. And this issue is not only for VR Logistics. It is also for KPN Travels. That is goods transportation truck. This is passenger transportation bus. Forget about even bus. It is also for railways and airlines. Indigo airline. Morning it goes from Coimbatore to Mumbai. Evening it comes back from Mumbai to Coimbatore. Airplane is goods. So Indigo will be registered both in Tamil Nadu and Maharashtra. Para 2. Supply of goods or services between related person or. So para 2 is a big headache for them. Para 2 is a big headache for them. You got that? Then Indigo airline morning it will pay output tax from Tamil Nadu to Maharashtra. Evening Maharashtra to Tamil Nadu. Output tax will be there in Maharashtra. Tamil Nadu will take the credit. But it is a big headache. And it is not only going to go to 2 states. It will travel. Right. So to avoid this, they said that no problem. We will not treat it as supply. If at all any conveyance or rigs, tools and spares on the conveyance. Conveyance will also have certain rigs, tools and spares. Spare items will be there also on conveyance, including special conveyance like tower cranes or concrete pumps and mixtures, which is not so important. Mainly it's conveyance and rules, tools and spare on that conveyance. When they go and come back. It is not supply. It is not. You can ignore para 2. In simple language, you can ignore para 2. It is an escape mechanism from para 2 of schedule 1. Para 2 of, but they clarify one thing. We are helping you from deemed supply. We cannot help you from actual supply. Supposing Indigo Airline decides to sell a plane or VR Logistics decides to sell a truck. That is actual supply. Pay GST. Indigo Airlines decides to sell out of 100 planes, it is deciding to sell 1 airplane. Out of 100 trucks, VR Logistics decide to sell 1 truck. Actual supply, pay GST. Supposing there is a problem in Indigo, 1 airplane, or problem with 1 truck of VR Logistics, repair and maintenance. You go to a mechanic shop, repair and that is actual supply. That is, so sale of truck, sale of bus, sale of airplane is actual supply, pay GST. Repair and maintenance of truck or bus or airplane is actual supply, pay. This is helping you out only from deemed supply, not helping you out from actual supply. So that is first thing. Second thing. There are 3 points only. First point you have completed. Second and third point only talks about government. First point talks about any person. Second and third point talks only and only about Any activity of government is also supply. If government is giving you some service, even by way of cleaning the roads or digging the sewage and charging the amount from the residential apartments or the industrial companies, it is subject to GST. It is subject to GST. Even if only government can do, even for sovereign functions, it is subject to GST. Any activity by government is liable for GST and government is happy. Sir, government will collect 10,000 plus GST. So 10,000 goes in the pocket of government. GST will be collected from you. GST will be, it is an additional income for the government. GST becomes, right, but only 3 activities of government are not subject to supply. PML. PML. Panchayat activity, Article 243G. Parle G. Parle G. Panchayat is Article 243G. Municipality activity, Article 243W. M. Reverse. W. Municipality is Article 243W. And L. Liquor. Liquor license fees. Liquor is outside GST. Liquor license fees is also outside GST. Liquor is outside GST. Liquor license fees is also state government. Not any other license fees. Only liquor. Mining license fees. GST. 2G spectrum, 5G spectrum license fees. GST. Whether 2G spectrum or 3G spectrum or 5G spectrum license fees paid by Airtel or Jio, subject to GST. Mining license fees paid by mining companies. GST. Only what license fees is outside? So what are the 3 activities of government outside GST? PML. Panchayat, Article 243G. Municipality, Article 243W. And liquor license fees is outside GST of government. So that is one part of not supply. One part of not supply. So we are almost done with entire supply. Actual supply fully done. Deemed supply fully done. Not supply, one part done, one part is left out. Nature of supply fully done. Nature of supply. So what is the last area in this chapter? Not supply. Not supply. So when you talk about not supply, first is employer-employee. First is, be very clear. I'll give examples. You have to answer me all the examples. Repeatedly ask question. I'll be throwing questions. You have to give me right answer. You're talking basically about employee to employer in course or in relation to employment. In course or who is giving to whom? Employee to employer. In course or employee can be 3 types. Low level laborers, normal employees, high level privileged employees. High level salary to first you are talking about only laborers and normal employees. Wages or salary to laborers or employees. No GST. Bonus to them. Not GST. Gratuity to them when they are leaving the employment. No GST. Why? It is not in course of employment, but it is in relation to employment. It is in non-compete fees paid to employee. Don't join other company. Now you are leaving my company. Don't join my competitor business for 2 years. GST or no GST? GST. Why? It is not in course of employment, not in relation to employment, not in. Got that? Got that? That is the first part. Renting of property to company. Employee is giving his property on rent to the company. Is it in course of employment? In relation to employment? GST. It will be subject to GST. Right. Perquisites received by employee in addition to salary. So that is part of employment. Salary plus perks. Salary plus perquisites or perks. It is in course of employment. No GST. Salary, no GST. Wages, no GST. Bonus, no GST. Perks, no GST. Gratuity, no GST. Non-compete fees, GST. Any other service like renting? GST. Clear? Now, this is all about your Normal employees or low level laborers and employees. What about high level employees? Partners, remuneration to partners. Technically they are not employees, but for GST they are like employees. Technically they are not employees, but for GST they are like no GST. No. So remuneration to partners, no GST. They are privileged, high category. Technically they are not employees, but for GST they are employees. Remuneration to managing director, whole-time directors. Technically they are not employees, but for GST they are treated like employees. Even in your income tax, TDS deduction is under 192, heading of which is income from salary, income from, so that is no GST. Remuneration to other directors, sitting fees to other directors, payment to independent directors, payment to nominee directors, not about whole-time directors or managing directors. It is other directors, independent directors, sitting, non-whole-time directors, nominee directors. GST will be there. They are not employees now. Managing director, whole-time director behaves like employees. Partners behaves like employees. So TDS to them is also under 192 for directors. But what about independent directors, nominee directors? They are technically not employees. Even for GST, they are not employees because they don't spend the entire time. They get profession fees. They get TDS in income taxes under 194J. 194, heading of which is professional and technical fees. Professional and subject to GST. Subject to under RCM. Under who will pay GST? Who is the supplier? Independent director or nominee director. Who is the recipient? Who will pay GST? Are you guys clear with this understanding? So privileged employees, partners, remuneration, loud and clear. Managing directors, whole-time directors, remuneration, where TDS is under 192. Sitting fees or profession fees to independent directors, nominee directors, where TDS under income taxes 194J. GST under employer employee. Second, deemed employees. Deemed employees, MP, MLAs or constitutional post. MP, MLAs or anyone who is having constitutional post like President of India, Governor of State, Chief Justice of India, Comptroller Auditor General of India or chairperson, member or director of government body, not government company. Government is different from government company. Throughout GST, remember that. Government is different from government. Chairperson, member or director of government body. Say for example CBDT or CBIC, Central Board of Direct Taxes or Central Board of Indirect Taxes and Customs is a government body. Chairperson, member or director of government body. Government. So here you are talking about deemed employees. Technically they are not employees. MP, MLAs, member of parliament, member of legislative assembly, state legislative assembly or member of municipality or panchayat. Center, state and local authority. Then constitution post. Then chairperson, member or director of a government body. Government, not government company. Next, court tribunal. Any amount paid to court tribunal outside GST. But amount paid to advocates, either exempt or RCM. Either exempt or supply. Is supply that? Yes. Amount paid to court tribunal. No supply. No supply. Right. Employees, deemed employees, court tribunal, then deceased. Where you are talking about deceased person. Funeral, burial, crematorium, mortuary, including transportation of deceased. No GST. No GST. Then you are talking about land and building. We have already discussed that. Sale of land, immovable property, no GST. Sale of building, immovable property, no GST. Sale of building is only when entire consideration is received after completion, construction is over. Which means if I am constructing a building, if you pay me advance, full advance or partial advance. Now it is not sale of building, it is construction of building. It is supply of service. But if you pay me full amount after completion certificate or first occupancy, which means someone has come and occupied whichever is earlier. Whichever is, you are paying me entire amount after the building is ready. After the 100% amount is paid after the building is sale of building, no GST. But if you have paid me advance, even 1 rupee advance, even 1 lakh advance or full advance, any advance, 50 amount advance, then it is not sale of building, it is construction of building. Because I am constructing for you. I am constructing for, during construction, if you pay advance, construction of building, GST will be there. After building is ready, full amount. Sale of building, no GST. Sale of building, no GST. An actionable claim. Actionable claim, there is no GST, but except few actionable claims where there will be GST. Your betting, gambling, lottery, horse racing, casinos and online money gaming, they will be subject to GST. Other actionable claim, what are the actionable claims which will be subject to GST? Betting, gambling, lottery, horse racing, online money gaming and casinos. Online money gaming and casinos. These will be subject to GST. These will be subject to GST. Insurance claim, no GST. Do actionable claim, no GST. Recovery from debtors, do actionable claim, no GST. What are the actionable claims which will be subject to GST? Betting, gambling, lottery, horse racing, online money gaming and casinos. And so they are all subject to GST. There are totally 10 paras, 2 are added only for the first time, out of which first 6 paras we have discussed. Next 2 paras, 7th and 8th para you don't have for your syllabus, but 9th and 10th para is there in your syllabus. I guess it is not there in this particular thing. Give me one text, 9th and 10th para. 9th and 10th para. You have 9th and 10th para. Don't worry, I have given this 9th and 10th para as by of chart. Co-insurance and reinsurance. Co-insurance and so co-insurance premium is not subject to GST. So what is co-insurance? What is reinsurance? Co-insurance is, if at all Reliance Limited tells that I want an insurance and 2 insurance companies joins together. 2 insurance companies joins together. Supposing insurance company 1 and insurance company 2. Insurance company 1 becomes the lead insurance company charging premium. And insurance company 2 is the co-insurance company. From Reliance Limited, the entire premium is going to be charged by insurance company 1 and this entire premium is already subject to GST. Supposing entire premium amount is 1 crore. It's already subject to GST. Out of 1 crore, which is already subject to GST, insurance company 2 will get a share. That share is received from insurance company 1. Insurance company 2 is getting a share from insurance company 1, which is called as co-insurance, which is called as, that amount is not subject to GST. Why? Out of this 30 lakhs is out of 1 crore. 1 crore is already subject to, ignore this 30 lakhs. Ignore this 30 lakhs. Clear? Clear? Are you guys clear with this understanding? Reliance Limited is entering into insurance between 2 insurance companies. Though the contract is by 2 insurance companies with Reliance Limited, but Reliance Limited company will pay only 1 company. Though liabilities of both the insurance companies, but it will pay only. So that is called as lead insurance company. It is paying 1 crore. That entire 1 crore is subject to GST. Out of 1 crore, 1 share will go to co-insurance company. That 30 lakhs, no supply, no GST. Then there is reinsurance. Reinsurance, something different happens. Now, Reliance Limited is entering into contract only with insurance company 1. So, contract is only with insurance company 1. So, now there is no contract with insurance company 2. So, that premium, entire premium of 1 crore is subject to GST. Now, insurance company 1 feels that there is a very heavy risk. It goes to insurance company 2. It goes to insurance company 2 and goes for reinsurance. Goes for that. Understand that reinsurance premium, supposing it is 20 lakhs. That reinsurance is also subject to GST. Reinsurance is passing on the risk later. Co-insurance is taking the risk together. Now passing on the risk together later, it's also subject to GST. Then what is not supply? For the reinsurance, who's going to pay whom? Insurance company 1 is going to pay 20 lakhs to insurance company 2. Who's the supplier? Payment is done by recipient. Payment is done by whom? When you are paying, you are supplier or recipient? So supplier. Insurance company 2 is the supplier. Insurance company 1 is the recipient. Correct. Payer is always the recipient. Payer is always a. So that reinsurance is subject to GST. 20 lakhs malus GST will be there. But for reinsurance, for every reinsurance, there's a reinsurance commission. So out of the 20 lakhs, a small amount will be given us back as commission to insurance company one. That is how insurance company runs. Whenever you are giving business to any insurance company, whether you give or another insurance company give, they'll give a commission. They'll give a. Now understand. For reinsurance, 20 lakhs, who's the supplier? Insurance company 2 is the supplier. Insurance company 1 is the recipient. It is subject to GST. It is subject to 20 lakhs will attract GST. But for this commission, for every business received by a insurance company. Now who has got business? Which company has got business? Insurance company who has got business. It will pay commission to whom? Who gave business? So out of 20 lakhs received from insurance company 1, it will pay back 1 lakh commission. Assuming 1 lakh commission to insurance company 1. Insurance company 1, which is reinsurance commission. Which is reinsurance? So who's the supplier now? Person who's paying is the liable to pay is recipient. So who's paying now? Who's paying this commission? 2 is paying this commission. Who's supplier? 1 is the supplier. 1 is the. So this reinsurance commission is outside GST. Is outside. Please understand difference. Co-insurance, risk are taken together. Co-insurance entire premium is outside GST. Co-insurance entire premium is outside GST because entirely 1 crore is finally subject to GST. Final insurance is finally subject to GST. They will ignore this 30 lakhs. Here, reinsurance premium is subject to GST. Reinsurance risk are not taken together. First insurance company 1 takes the risk, then later on pass it on to the insurance company 2. So reinsurance premium charged by reinsurance company 2 is subject to GST. But for that reinsurance, there's a commission. That reinsurance commission is outside GST. Co-insurance premium is outside GST. Reinsurance commission is outside GST. Co-insurance premium is outside GST. Reinsurance commission is outside GST. That is para 9, para 10. For the very first time, your question amendment is that for the very first time. So you can expect this question highly there because it has come for the very first time for your September 2025 exams. Very first time. Clear? Clear? Now this completes our second chapter. So we are only focusing on 5-star and 3 stars. So first chapter fully over. All 5 stars, all 3 stars over. Second chapter fully over. A sure short question. First chapter I cannot tell a sure short question will be there or not. But second chapter a sure short question will be there on supply. A sure short question will be there on your supply. Are you guys clear with this understanding? Right. We'll take a short break. Sharply 15 minutes break. So we'll start by around 12:15. When you're talking about the next important chapter, a mandatory question will be there from this chapter. So just like your supply, which would be occupying 3 to 4 marks for sure. Valuation generally occupies. Very rare cases ICA misses to ask question on valuation, which means if you take the last 7-8 exam papers, so the probability of not asking any question about it is hardly less than 5 or 10%. So all the last 7, you take last 10 exam papers, 9 exam papers you will find. 1 exam paper you may not find a question on valuation, which is very rare. Surely you will be getting a question on your valuation chapter. A very simple way to remember your valuation chapter is seeing this table. What is there to be added and what is there to be subtracted? Valuation provision is section 15. It's only one section. Section 15. If you satisfy conditions, what are the conditions that you need to satisfy? First, you need to satisfy that it is an unrelated party transaction. So question will always be giving all these basic things. It should be unrelated party transaction. Supplier and recipient should be unrelated, plus price is the sole consideration, plus it is not a special notified case. Should not be a notified case which is covered by valuation rule, which is only covered by valuation rule. Supplier recipient should not be related. Point number one. Price is sole consideration, which means 100% monetary consideration. 100%, and it should not be a special notified case covered by valuation rules. If all these three things are satisfied, valuation remains in section 15.1 read along with 15.2 and 15.3 for addition and subtraction, where your assessable value will be equal to transaction value plus 5 items and minus 2 items. Transaction value plus 5 additions minus 2 subtractions. Minus 2 subtraction. That is the summary of your valuation provision. Now, what is transaction value? Transaction value in simple words means price paid or payable. So, it is selling price or service charges which is paid or payable by the recipient to the supplier. Amount which is paid. Every question will have a selling price if it is goods, or service charges if it is service. So, start from your selling price or service charges given in the question. Then don't start with additions. First go with subtraction. First go with what is the only subtraction that you're going to do. There are 2 subtraction. Yes, I understand. Both are discount. Both are discount. So first go with your subtraction. What is the subtraction that you have? Your discount. What is first discount? Discount given at the time of supply or before supply. The only condition for it is to properly show an invoice. 100 rupees minus 20 rupees discount. What is the final answer? 80. Properly show it on invoice. Duly recorded on invoice. Discount will be subtracted. Discount will be subtracted. In what case it won't be subtracted if it is given at the time of supply? If it is not properly shown on invoice. If you tell it is 100 rupees but later on you give a discount. Supposing you freeze the transaction 100 rupees. So 100 rupees plus GST. Then while making the payment, is not paying you 100 plus 5 rupees. Assuming 5 rupees GST, he is paying you only 95. He is paying you only, then the answer is only 100. Because you did not duly record on, the invoice. Properly it should be shown on invoice. So if discount is 20 rupees and price is 100. So on the invoice show 100 less discount 20, net price 80, GST will be only on 80. GST will be only on 80. But if discount is 20 rupees but finally decided, so on invoice it is only 100. GST will be on 100. But when he is making the payment, he will subtract 20. So that is not duly recorded on the invoice. GST will be only on 100. GST will be only on the 100 value. Why? Discount is not recorded on invoice. It is at the time of payment. It is at the time of payment. Next, discount which is given after supply. Discount which is given after supply only if conditions are satisfied. Condition number 1. Agreement to give that discount should be at the time of supply. Agreement should be, you have to agree that I am going to give you 10% discount if you purchase 1 lakh quantity throughout the year. So agreement is now, discount will be given later on. Agreement is at the time of supply. Second, it should be duly linked with invoice. It should be duly linked with, so this discount will be given by way of credit note. Credit note is reducing the value, reducing the tax. So that credit note should be linked to invoice. For discount, see you have sold for 100 rupees. Let us assume same 20 rupees discount. Initially you have sold for 100 rupees, paid GST on 100 rupees. Say 5 rupees, 5%. Now you are giving discount of 20 rupees. But when? After 4-5 months. So you agreed, if you make the payment within 4-5 months, I will give you a discount of 20 rupees. Correct? Or if you purchase so and so quantity, I will give you a discount of 20 rupees. Now you are giving discount by way of credit note. It cannot be there on invoice because discount is given after 5 months. By way of credit note. That credit note should be linked to invoice. So invoice is 100 plus 5 rupees. Your credit note will be 20 plus 1 rupee. 5% on 20 rupees will be 1 rupee. I am assuming rate of taxes 5%. Correct? So that credit note should be linked with your tax invoice. And the main condition, They are telling supplier, you initially paid 5 rupees on 100 rupees. Now you are reversing 1 rupee. 20 rupees multiplied by 5% is 1 rupee. Now you are reversing output tax of 1 rupee. But your customer initially has taken credit of 5 rupees. Ask him to reverse proportionate ITC of 1 rupee. Ask him to reverse proportionate ITC of. We are allowing you to reverse output tax on 1 rupee. Sir, how is the output tax on 1 rupee? What was the tax initially paid? What was the tax initially paid? 100 plus 5. This is at the time of tax invoice. 5%. At the time of credit note, 20 plus 1. If you understand it clearly, what is the value? 100 minus 20, which is equal to 80. And what will be the tax? 80 multiplied by 5% is 4. Now what is the tax here? 5 you are paid, 1 you are reversing. So what is the tax now? 4, same 4. Value becomes 80. So tax will finally be 4. But 5 rupees you have initially paid and customer has taken the credit. Now you are reversing 1 rupee. Now you are reversing 5 rupees is paying, 1 rupee is reversing. 1 rupee is, if you are reversing, your customer should also reverse ITC. If you are reducing your output tax, your customer should also reduce 1 rupee proportionate ITC. They are putting obligation on the supplier. They are putting obligation on the supplier. So what are the 3 conditions for discount after supply? So there will be discount at time in the question, given in the question after supply. And you will find that conditions are satisfied. When writing the answer, you will reverse this discount. They will never ask about tax. In question, it will be always 100 minus 20. In question, the focus will be only on what? Selling prices 100, discount is, though it is after supply, what is the value? What is the final value? 100 minus 20? Answer is 80. Your question will be only talking about value. Value is 80. Value is? But how you did it? Initially you paid tax on 100. Then you reverse tax on 20. So your value became 100 minus 20. Your tax became 5 minus 1. So value is 100 minus 20. So question will tell to find only value. So value becomes 80. But you have to write in explanation part. This discount is after supply. And it can be reduced only if agreement to give discount was at the time of or before supply. The credit note which is given now is linked with invoice. And if supplier is reversing output tax on this 20 rupees, that is 1 rupee, customer should reverse proportionate ITC. On this reduction of value, supplier will reverse output tax. So customer should reverse proportionate ITC, not entire ITC, proportionate ITC. The burden is on the supplier. Sir, when this will not be reduced? If, now just reverse the condition. If there is no agreement to give discount at the time or before supply, can you reverse 20 rupees? If you cannot reverse 20 rupees, what is the value? What is the value? You cannot reverse. You cannot reverse output tax. Value is 100. On 20 rupees, you cannot reverse output tax. Value is 100. Correct. If agreement is not at the time of supply. This is very common in case of bad debts. For bad debt, supposing finally customer pays only 80 rupees. 20 rupees is bad debts. Can supplier give a credit note with GST reversal 1 rupee? No. Why? Agreement was not there at the time or before supply. Agreement was not there at the time or before supply. So when agreement is not there at the time or before supply for bad debt short payments, tax will be on 100 rupees, value is 100 rupees, 20 rupees will not be reduced. 20 rupees will not be reduced. Or credit note is not given. You are not giving credit note with linking with invoice. You are not giving GST credit note. You are just giving financial credit note. So what is GST credit note? GST credit note is giving 20 rupees plus 1 rupee reversal of output tax. Financial credit note is only giving 20 rupees, no GST. You will not reverse output tax. Customer need not reverse proportionate ITC. So you are giving financial credit note. So this is financial credit note. And this was GST credit note. Or third case, You are satisfying first two condition, but your customer is not reversing proportion. This will not be asked in the question because this will be known later on. This will be known only later on. You cannot find it now. This you can find it only later on. So question will never ask about this third point. Question will never ask about this third point. Are you guys clear with this understanding? So what are you reversing now? Two discounts. Discount at the time or before supply. Duly record on invoice, one condition. Discount after supply, three conditions. After supply, so finally value becomes 100 minus 20, 80. If I want to make it simple, GST is on gross selling price or net selling price? Value is gross selling price or net selling price? Generally net selling price subject to conditions. Subject to conditions. It is on net selling price. Net selling price. These are the deductions. Always start with deductions. Always start with deductions. Now additions. 5 additions. 5 additions. First addition is non-GST taxes. You will add other GST, other than GST taxes. GST will not be on GST, but GST will be on other taxes. Say for example, cigarettes will have excise duty and GST. Cigarettes will have excise duty and so now your value will be selling price plus your value will be selling price plus excise duty. So your value becomes selling price plus excise duty. So any tax, it need not be excise duty only. So when you're talking about cigarettes, it is excise duty. When you're talking about airline, it is air travel tax. So your GST will be on price plus air travel tax. When you're talking about motor vehicle tax or so when you talk about your value 1 lakh is the basic price. 10,000 is other taxes. 10,000 is that other taxes can be air travel tax, excise duty, motor vehicle tax, road tax, etc., etc. Municipal tax. Question will repeatedly give this. Municipal tax. Municipal. You are going to watch movies, right? So, supposing ticket price is 100, entertainment tax is 10 rupees. GST is on. What is the value for GST? Movie ticket is 100. Entertainment taxes by local authorities 10 rupees. What is the value for GST? Louder. 110 multiplied by the rate of tax. Multiplied by the rate of tax. So GST is always on other taxes. But GST will never be on income tax TCS. GST will never be on. So selling price is 1 lakh. GST is say 18% and income tax TCS is say 1%. This is first of all income tax TCS. Income tax TCS. So in this case GST will be only on 1 lakh rupees and not on income tax TCS. First, this is not indirect tax, this is direct tax. Second, it is not even tax. It is not even. So income tax TCS will go to the opposite person in his 26AS or AIS. And if that person is not having any income, it becomes advance tax of the other person. It becomes advance tax of the, if he is not having any income, he'll take the refund. So, in simple words, GST is on all other indirect taxes. GST is on all other indirect taxes. So, GST is on all other indirect taxes. All other indirect taxes. It will not be there on income tax TCS. It won't be there on GST. GST cannot be on GST. CGST will not be on SGST. SGST will not be on CGST. So GST will not be on GST. It is on all other indirect taxes other than GST. All other indirect taxes other than GST. Clear? First addition. So your question will give, normally it gives what? Municipal tax. Tax levied by municipality. Add it or remove it. Add it or ignore it. Add it or ignore it. Done. So your selling price done. See the question take. Discount done. See the question. Can you deduct it? Yes, but with conditions. But with condition. One condition, three condition. Other than GST taxes, add. No condition. Add. Then there is payment by recipient. Payment by recipient to some other person on behalf of supplier. Payment by recipient to some other person on behalf of supplier. So recipient is now making the payment to some other person on behalf of supplier. So you're talking about a scenario where there is a wedding in your family. And even management company tells that we are going to charge 15 lakh rupees. We are going to charge 15 lakh rupees. Right? But when the event is coming near, one person comes to your place and he is putting up some tents at your house. And he's telling that pay me 1 lakh rupees. Pay me 1 lakh rupees. So your family, whether your father will pay 1 lakh rupees? No. He'll call whom? He'll call the event management person and tell that, see, we have agreed for 15 lakhs. Now this person is asking 1 lakh. The event management person tells that pay him 1 lakh. So you don't pay me 15 lakhs, you pay me only 14 lakhs. Your father will tell, okay, fine. I'll pay him. So when I'm going to pay you, I'm not going to pay you 15 lakhs. So what is the value for event management company? What is the amount paid by your father to the event management company? Payment by recipient to the supplier. So starting point is only that. Amount paid by recipient to the supplier, 14 lakhs. But this 1 lakh, should it be added in the value of event management company? Yes. Why? It was payment by recipient to third person. Rather, your father would not have even asked his name. Wait till one person came, right? He will not be even asking his name. Just a confirmation over a phone is sufficient. So this payment by your father, recipient, to third person was on behalf of supplier. So value for the event management company will still be 15 lakhs. Though he is finally getting only 14 lakhs, but he will pay GST on. Why? The 1 lakh that recipient paid to third person was on behalf of supplier. On behalf of, see, don't think that that third person will not pay GST. That third person also will pay GST. For him, he is a supplier and event management company is the recipient. He will also pay GST. Value is 1 lakh. Simple 1 lakh. So that is very simple. We are talking about event management company as a supplier. Event management company as a supplier is getting 14 lakhs from recipient. Recipient to supplier, 14 lakhs. Recipient to third person on behalf of supplier, 1 lakh. So total value for the event management company as a supplier, 15 lakhs. Got that? Got that? So answer is 15 lakhs. But if I tell that your father agreed only for 14 lakhs and that 10 person was a separate person. He came at the house and put some tents and lightings. Paid 1 lakh separately. Now what is the value for the event management company? That payment to third person was not on behalf of the. So now there are two supplies. Again, earlier also there were two supplies. Now also there are two supplies. Difference is, in the earlier example, two supplies was event management company to your family and third person to the event management company. Event management company to your family was 15 lakhs. Third person to the event management company is 1 lakh. Right. Don't worry, there's no double taxation. Whatever output tax is paid by the third person, credit will be taken by event management company. Credit will be taken by. Right. Then event management company will pay output tax on 15 lakhs. It will use the credit. It will use the credit. Now, in this case, where I change the question and I tell that 1 lakh payment to the person, third person, was not on behalf of the event management company. Then, event management company answer is only 14 lakhs. 10% answer is, what is the difference now? Event management company to your family, 14 lakhs. Third person to your family. Recipient is your. So in both the cases now recipient is your family. But in this case, for event management company, who was the recipient? Your family. Value was 14 lakhs plus 1 lakh. For the third person, who was the recipient? Event management company, 1 lakh. Right. So when this will not be added? When this will not be added? When it is an independent payment. When it is an independent payment by recipient to third person. When your family paid that 1 lakh independently to the 10th person, then it was not added to value of event management company, because event management company will not even know about it. Event management company will not even if he knows, not his work. It is not his headache. Clear? That is this point. Next. Yes, please. Yes, please.
As discussed in the first thing, the core motto of bringing GST is to avoid cascading.
There's no cascading.
But here we are having all the non-GST taxes.
So I go to the first point and read that first chapter, first point again. I never said it is eliminating the cascading effect. Read that point again. It is mitigating cascading effect. Mitigating means reducing. So cascading effect in GST is not at all removed. It is reduced to a greater extent. It is reduced to a. So your point is valid. That's cascading. Tax on tax. When you see excise duty, price 1 lakh. Motor vehicle tax 10,000. GST is on 1 lakh. So yes, that is cascading for sure. But whether GST has eliminated cascading effect? No. I'll give you another instance. In ITC, one of the key area of question which will surely be there in your question paper is block credit, section 17.5. So if at all if you want to bring that, the same logic applies there. If you want to give entire credit, then why block credit? If there is a block credit, there is a cascading effect. If I cannot take the credit, obviously there is a cascading effect, but for limited purposes. You got that? So here also there is cascading effect when I said selling price plus other taxes. Selling price plus. True. There is cascading. Comparatively, it is almost gone. Is it gone or almost gone? So that word almost, or that word mitigating, or that word reducing is important. It is never eliminating. It is never eliminating. The word, we never use the word. Cautiously, we use the word mitigating or reduction. I will never use the word eliminating. Cascading effect is not eliminated in GST. One reason that she has pointed out, GST is on price plus other taxes. Second reason, block credit. Blocked credit. There are certain expenses where you cannot take the credit. So that is again, you will be focusing only on cascading effect. So that will be there. Clear? Now, these two additions are done. One is all other indirect taxes. All other than GST. Second is recipient to third party on behalf of supplier. It is recipient to third party on behalf of supplier. Next, incidental expenses for anything done before supply or before delivery of goods or supply of services. On or before delivery of goods or supply of services. This is a short addition. Whether you have taxes addition or not, whether you have third person paying to a recipient paying to third person on behalf of supplier or not, this will be surely there. So what is this particular thing? It is incidental expenses. What type of expense? Anything. It can be packing, special packing, secondary packing, protective packing, loading, unloading, handling, transportation, insurance, freight, commission, warranty, guarantee, initial warranty, extended warranty. It can be anything. I can go on with the list. I can go on with the list. Erection, commissioning, installation. Go on with the list. Anything. Incidental expenses for what? Anything done. But when? On or before delivery of goods or supply of services. On or before delivery of goods or supply of services. Now, let us take this example. Very simple example. Right? If at all you want to go through the list, I'll repeat it at the cost of repetition because these are all the items which I institute at different point of times, different questions I've asked. So it can be packing, special packing, secondary packing, protective packing, transportation, insurance, freight, loading, unloading, handling, your installation, commissioning, erection, warranty, guarantee, extended warranty, etc., etc., etc. Give an example of 17 items. It can be etc., more than that. Right? Anything. But on or before delivery or supply of services. Supposing you purchase a phone. Selling price 1 lakh rupees, initial warranty 2000 rupees. If you want 1 year warranty, if you want another 2 years warranty, 1 plus 2 years, you now itself pay 3000. At the time of sale itself pay. So what is the total value? 1 lakh is price of phone. 1 lakh is if you want, you take initial warranty, extra pay 2000. If you want another 2 years, you paid now itself another 3000. So at the time of purchase of phone, how much you paid? So both are incidental expenses for anything done. Both are incidental expenses because it is at the time or before delivery of goods. Correct? Correct. So there's only one transaction. You'll pay on entire amount. You'll pay on entire amount. Next, you are purchasing the phone. Now you only go for initial warranty. You pay only 2000. You pay only. So this is incidental expenses at the time of delivery of goods. What is the value now? Value in the earlier case was 1 lakh plus 2000 plus 3000, 1 lakh 5000. In this case, it is only 1 lakh 2000. But within that 1 year, you thought that no, I want extended warranty. So you went after 9 months. You went after 9 months. So this is happening after 9 months. And you said that no, I want extended warranty. How much to pay? And they said that okay, please pay 2000, and you readily paid it. You readily paid that 3000. Now what is the answer? This 3000 will also attract GST. So finally 1 lakh 5000 there also, 1 lakh 5000 here also. But there's a big difference. Here in the first case, the transaction was only one transaction. There was only one transaction. In the second case, there are two transactions. Transaction 1. So here there is only one invoice, but here there are two invoices. Two. Now welcome to the world of composite supply, mixed supply. In the first case, value was what? 1 lakh. 1 lakh multiplied by what rate? Supposing selling phone, rate on the phone is 18% and warranty charges is say 5%. What is the rate that you are going to apply? For entire 1 lakh 5000, you will go with? 80%. Why? You will go with the rate of principal supply of goods. So you will go with 18%. You will go with? In the second case, for 1 lakh 2000, the rate on phone was 18%. The rate on warranty is 5%. The rate on warranty is, but for 1 lakh 2000, you will go with what? You will go with the rate of phone 18%. Because what is the principal supply? Phone 18%. If the rate on phone was 12, you will go with 12. If the rate on phone was 28, you will go with 28. If the rate on phone is 0, you will go with principal supply. This is a composite supply, naturally bundled. You will go with the rate of principal supply. But what about the next transaction in this particular case? Extended warranty, you went separately. That is the same transaction or another transaction? Now, there is no concept of composite supply or mixed supply here because there is only one supply. Now, what is the value? 3000. What is the rate? You go only with 5%. To be very clear, the first was a case where supply of goods was there, phone was there, and the rate was 18%. Second is the supply of? Now it is only warranty. Supply of service. So that is the difference. This will be surely a part of your question, be it a valuation question or any other question, ITC question. This will be surely part of a question. In the first case, there was only one transaction and the entire transaction was that of supply of goods and the entire rate of tax was 18. In the second case, there were two transactions. First was supply of goods because principal supply is phone, the rate is 18. Second is supply of service, warranty, supply of service. That is the second supply, separate supply, another invoice, and the rate is? Why? It is not at the time or delivery of goods. This was not at the time. This was, you cannot call it as incidental expenses because it was not at the time of delivery of goods or supply of services. It was later on. After 9 months. Clear? So when this incidental expenses will not be added? When you are charging after delivery of goods or supply of services, it is an independent supply. So it will be treated separately. It is not part of the original supply. It is not part of the original supply. Next, you are talking about interest, late fees or penalty for late payment of consideration. Question may give you interest, question may give you late fees or question may give you penalty because customer is paying late to the recipient. He is paying late fees. He is paying late fees or interest or penalty, whatever question gives, for delayed payment of consideration. For delayed payment of, customer promised that he'll pay within 3 months. Now he's paying after 9 months. So value was 1 lakh. Now he's paying interest of 10,000. Now he's paying interest of, so what is the total value? 1 lakh 10,000. 1 lakh 10,000. Are you guys clear with this understanding? Are you guys clear with this understanding? So interest on delayed payment of consideration. Delayed payment of, but what will not be added is your interest on loans. Interest on loans. Interest on loans is not added. Interest on loan has got nothing to do with it. So interest on loan, there's an example which is given. Let me walk through that example so that it is easier for you to. Okay, it is given later on. Okay, I'll give that example myself so that you can easily understand that example and understand the effect of this particular example. Supposing, I'll give a very basic and simple example. Supposing you go to Chennai Mobiles, right, and your purchasing will go the same value. You go to Chennai Mobiles and you're purchasing a phone. You're the recipient. You're purchasing for say 1 lakh plus GST. And within the Chennai Mobiles, there is a non-banking financial institution, a non-banking financial company, which is giving you EMI facility, which tells that don't worry, I'll pay that amount. I'll pay that amount. Supposing this GST comes to 18,000. 18% is the rate of tax. So it is telling you, I'll pay you 1,18,000. You give it to Chennai Mobiles. You pay me with interest. You repay back with interest. You pay me 1,18,000 plus you give me interest. Right. This is first case. Second case, Chennai Mobiles says that no, why should I bring non-banking financial company in my premises? I am having sufficient cash. I am a cash rich assessee. You get a maximum cash sales. I am having sufficient cash. I'll offer him EMI facility. Why to bring a non-banking financial company? This is very common with motor vehicles earlier. Now it is almost common with every item. Right? I'll give you EMI facility myself. So now you pay, you are getting a product for 1 lakh plus, phone for 1 lakh plus 18,000. Chennai Mobile itself tells that now you don't pay me this amount, take it as loan. When you repay me, I am giving this amount as loan to you. When you repay me, repay with interest. Now please understand, both are having different tax treatment. One is a case where Chennai Mobiles, there are two supplies. First, Chennai Mobiles to recipient. Second, NBFC to recipient. Chennai Mobiles to recipient, there is supply of goods. The value for which is 1 lakh. And NBFC to recipient is supply of service, loan services, where the consideration is interest on loan. And the value is interest amount. Whatever is the interest amount? This interest amount happens to be exempted. It is exempted. Interest on loan is exempt. It is one of the exempt supply. So that's an exemption notification for interest or discount on loans or any bills of discounting. It is exempted. But in the second case, there is actually only one supply. Chennai Mobiles to recipient. Chennai mobiles to recipient. That is supply of goods only. Supply of goods only, where the value is not only 1 lakh plus interest. This interest is not interest on loan. This interest is not interest on loan. This is late payment of consideration because he was a supplier. He supplied the goods. Now I am paying him late. So this interest is interest on delayed payment of consideration. This interest was interest on loans. This interest amount was not given to Chennai Mobiles. Supplier of phone was Chennai Mobiles, but supplier of loan was NBFC. So this is interest on loan which is exempted. But this is interest on delayed payment of consideration which is part of composite supply, where the principal supply is supply of goods, where on the entire amount 1 lakh plus interest, the rate of tax. In this example, we have assumed the rate of tax on phone is, it will be 18%. It will be 18%. Clear? Clear? Interest on loans is given by a separate person. That's a new supplier. It is not Chennai Mobiles. It is interest on loan. It is exempted. Separate supply by a separate person exempted. This, you cannot call it as interest on loan because supplier of phone is Chennai Mobiles and loan facility is also offered by Chennai Mobiles. Supplier is the same. So this interest, you cannot call it as interest on loan. It is interest on late payment of consideration. Therefore, 1 lakh plus interest on late payment of consideration will be subject to GST as a part of composite supply, where the principal supply is phones and the rate of tax in this example was 18%. Clear? Clear? So this will be added. What about interest on loans? If at all it is given by a separate person, supplier himself cannot give loan. Chennai Mobiles himself cannot tell that I am giving loan. You are allowing the customer to make payment late. So you don't call it as loan, it is interest on late payment of consideration. If next person, NBFC or some other person is giving loan, then that interest payment is interest on loan. It is an independent supply which is exempt. And finally, the last addition, subsidy. Yes, please.
Penalty is not known at the time of invoice issue.
You are not going to give invoice for that. You are going to give a debit note. Good question asked. Please understand this, for this interest, you will be giving a debit note. So there will be two documents. One for 1 lakh. Because you will never know whether customer is going to pay on time or not. Correct? In this case, there is an EMI facility. That is different. But normally, if the customer is promising to pay within 3 months, but paying after 9 months, you will collect interest. So for 1 lakh, you will be giving tax invoice. For this interest amount, you will be giving debit note, otherwise called as supplementary invoice. Pet name of which is supplementary invoice. So it will not happen with a single document. It will happen with the 2 documents. Just like discount after supply, you give credit note. This is addition after supply. You will give debit note, otherwise called as. So valuation question answer will be together. For document chapter, there are 2 separate documents. For 1 lakh at the time of sale, you never know customer is going to pay on time or not. Will be even tax invoice. For this interest on late payment of consideration or penalty on late payment of consideration or late fees on late payment of consideration, actually you will be calculating the number late. You will be knowing that exact thing late. You will calculate that later. So for that you will be giving debit note, otherwise called as supplementary invoice. Now the last addition here is subsidy from other than government. Subsidy from other than government. 2 conditions. Subsidy should not be from government. Second, it should be directly linked to the price. If at all any of the 2 conditions is not satisfied, don't add it. If subsidy is from government, don't add it. There will be questions for sure. Subsidy will be from government, don't add it. Or subsidy is not directly linked to the price. General subsidy. General, it is not unit based subsidy. 1 unit this subsidy, 2 units this subsidy. Per unit 10 rupees subsidy is directly linked to the price. Overall 1 lakh subsidy. Overall, so if it is not linked to the price, it is not per unit. We call it as general subsidy. That won't be added. That won't be added. So for this, I have to take this question for sure because question will ask anything. First, conceptually, let us understand. Selling price, will it be added? Yes or no? Subsidy from holding company. These are all questions by ICA. From holding company.
Yes.
Is it from government? Add it. Subsidy from ITC company. Some other company, let that company be say ITC company. Added or not added? Other than government. Subsidy from Tamil Nadu state government. Subsidy from Tamil Nadu state government. From holding company, add. From any other company, add. From Tamil Nadu state government. Subsidy from central government company. Government is different from government company. Government is different from government company. Government is different from. So if it is from government company, add. From government, don't add. Government company, add. Subsidy from Tata, it's to be added, but if it is a general subsidy. General subsidy means how many units not allowed? I am giving per this year I am giving 1 lakh. How much you sell and all not allowed. General subsidy, added or not added? Now if you see this example, you get everything. Correct? Correct? From holding company, you added it. Related person, you added it. ITC company, unrelated person, you added it. Government company, added it. Government, no. General subsidy, not added. Right. This is conceptually. Now the question may give two things. Selling price includes the subsidy, selling price excludes the subsidy. If selling price includes the subsidy, now things are different. 1 lakh includes. 1 lakh includes all these subsidies. 1 lakh includes. Now let us go one by one. Whether subsidy from holding company is to be added?
No.
Subsidy from holding company is to be added. First, conceptually answer yes or no. Yes, it is to be added. Is it already included? Don't do anything. Subsidy from ITC company is to be included? It is already included. Don't do anything. Subsidy from state government, Tamil Nadu state government is to be included, but it is now including it. So subtract. So subtract. Subsidy from central government company is to be included. It is already included. Don't do anything. General subsidy, normally it has got nothing to do with per unit. Ignore it. Ignore it. It is not per unit. So you cannot add or you cannot subtract. You can never add, you can never subtract. So your answer becomes 99,500. This will not be the general statement. Generally, question will always tell that subsidy is excluding, selling price is excluding subsidy. Selling price is excluding. By the question does not gives you anything, go with second option. Question does not gives you anything, go with second. Excluding subsidy. Now, 10,000, 1 lakh surely start. 10,000 is to be included. It's not already included, add it. From ITC company, 1,000. It is to be included, not included, add it. Tamil Nadu state government, it is not to be included, not included, don't do anything. Central government company, 300 rupees. It is to be included, not included, add it. General subsidy, forget about addition, forget about deletion. So what is the answer? 1,11,300. 1 lakh. So it differs. Yes, please. Read the question again. Selling prices including that subsidy, which means overall the price plus subsidy figure is 1 lakh. Selling price including subsidy is 1 lakh. Selling price including all subsidies is 1 lakh. That is how you read it. Selling price including whatever, whether selling price is paid by the customer or subsidy is given by anyone, everything inclusive. 1 lakh includes everything. 1 lakh includes amount paid by customer, also subsidy given by different persons. Subsidy given by. So it is not a question of addition because 1 lakh includes everything. It is all a question of subtraction. Here, selling price is 1 lakh and excluding subsidy means subsidy is additionally given. Subsidy is additionally given means it is a question of addition. You got that? Meaning is clear. When I tell 1 lakh price is including subsidy, It is price plus subsidy by different persons. Overall is 1 lakh. So 1 lakh includes amount paid by customer, amount paid by different persons as subsidy. Now already subsidy is all included in it. If at all you have to remove something, you have to remove it. Right. Second case, 1 lakh is basic amount paid by the customer. Subsidy given by different persons is extra. You do whatever treatment you want. It is a question of addition. It is a question of addition. By default assumption, what you'll take if the question is not clear? You'll always go with this default assumption. By default, go with this. At times, I say confuses to the core. Selling price after considering subsidy. So you don't know whether it is including or excluding. So you can assume anything. Always go with better second understanding and write a note. After considering subsidy can be either assumed to be including subsidy or. So ICA does it. ICA gives a note. This could be assumed either ways. This could be assumed. But by default, always go with. When the question is not giving anything, always go with addition. When the question is using a confusing term like considering, considering subsidy could be assumed to be including subsidy. Considering subsidy could be assumed to be after removing subsidy, it is only the basic amount given by the customer. Excluding, it is a way of interpretation that English could be understood in either ways. Right? So ICA will give an answer telling that you could have assumed either ways, but I will suggest you to go with the second part. Yes. Now, what you have done? Yes, please. Yes, after considering means you should not write a note for including, excluding. By default, it is understandable. You can write a note explaining as it is already including it. Now we are not adding it. You can write always a note. But if it is considering, after considering, you have to assume that selling price after considering subsidy, we have assumed to take it as selling price excluding subsidy. Therefore, subsidies which are to be included, we have added. And subsidies which are to be excluded, we have not done anything. We have not done anything. Clear? Yes, please. General subsidy ma include agadu ma. Eppadi include agu? This is per unit price. Suppose aliens are living on this planet. I'm just telling you the way. Suppose aliens are sitting along with you. That is not general subsidy. First understand the meaning of general subsidy. These are all items. It is per machinery or per unit. Per unit. This I cannot even answer it because I cannot even assume it. This is overall, say per year. இந்த இயர்ல நீ எவ்வளவு செல் பண்ற முக்கியம் இல்ல. நீ ஒரு யூனிட் செல் பண்ணாலும் சரி, 10 யூனிட் செல் பண்ணாலும் சரி, 100 யூனிட் செல் பண்ணாலும் சரி, 1 lakh யூனிட் செல் பண்ணாலும் சரி, 1 கோடி யூனிட் செல் பண்ணாலும் சரி. I'm going to give you only 10 lakhs. Now you please tell me how I can suppose that it is including this. You answer me. How can I go with that assumption? So suppose is not even possible. And a lot of students tell that nothing is impossible because impossible itself tells that I am possible. Now prove this. Prove this. That suppose is not possible. You get that? It is good for motivation. Good. But at times you have to understand the reality. This is an impossible task. I'll give you hundreds of the scenarios and indirect taxes when you come for the main classes of inter or maybe final, more than that, where I'll tell the statement again and again. Those who tell that nothing is impossible because impossible itself tells I am possible, very good for motivation. In reality, there are certain things. This is an impossible task. So I cannot even go with an assumption because it is not possible. This situation, what you're telling is not possible. Because when Tata company has given this 10 lakh rupees, okay, just take this example. 1 lakh per unit. This is 10 lakh. With the addition, subtraction in this, you will get a negative figure. Right? It is not possible. So I don't have an answer. Reason is, it is not possible. I'm not talking about difficulty. I'm talking it is not at all possible. So we cannot have that particular understanding or assumption itself. Are you guys clear with this understanding? See, every price is transaction based. Transaction based is per unit based. And general subsidy has got nothing to do with transaction. It has got nothing to do with any transaction. That's the difference. You cannot add apple with elephants. Right? Generally, if I tell there are 2 apples and 3 elephants, what is the total? Normally, you can tell it's 7, but normally you cannot. Tell me only one item, one unit. You tell me either 7 apples or 7 elephants. Can you tell it? No, not possible. It is No, I can tell a number. Totally it is 7. 4 apples, 3 elephants. But if you ask me, tell only no. Either tell 7 apples or 7 elephants. Impossible. It is impossible to give that particular one answer. So it is transaction. Entire concept is transaction per unit. And that general subsidy is not at all bothering about transaction. Therefore, we neither add it, neither we reduce it. So in both the questions, if you have carefully observed, I have not put dash and all. I have put cross to differentiate exactly your point. Everywhere else, wherever I have added or subtracted, balance figure I have put what? Dash. But this exactly this question that she has asked, what I have put? Cross mark. Impossible to state that dash is different from. I have to differentiate it, right? So I put cross mark in both the places. So it is not dash dash cross mark. Not possible. You can neither add it, neither you can subtract it. So that completes your simple, basic, fundamental 5-mark question with half a page. All you have to do is revise half a page, and that half a page only puts 5 star. Rather, it's only 2 pages or 3 pages chapter. So that half a page, last only this page. You need not go through other areas in beginning areas and all. This half a page, put 5 star. Short question. Short question. So now suddenly we have done with 3 chapters. GS in India, 3 star, 5 star over. Supply. Almost we have seen entire chapter, important area of supply, everything over. Then valuation over. Now we'll move with the chapter which is short. I mean, equally important as valuation. Don't tell me where is this are in ICA module. No, we are not going as per your ICA module. We are clubbing 2 things as per your ICA module. One is part of levy, where you are talking about composition scheme, and one is your exemption from registration. Your exemption from registration. Right, small dealers. So here we are clubbing 2 things. Please give me a reminder when the time is about 1:30 to 1:35. Daily, today and tomorrow, 1:30 to 1:35, 40 range, we'll have a lunch break. Please give me a reminder. What is the time now? 1:15, right? They will not take this chapter. We'll take another goodie chapter, which we can easily complete it, so that within the time, we'll be able to see that. Small chapter, classification chapter, where we have the concept of your composite supply and mixed supply. When you talk about classification, we are talking about the rates of taxes. What are the rates of taxes generally? 0, generally 0, 5, 12, 18, 28 percentage plus compensation cess, etc. Then that etc 3, 0.25, 0.1 and all will come. The main rates of taxes are 0, 5, 12, 18, 28, etc. Never use that, stop there, etc. So your 0.25, 0.1, 3 percentage, etc. will come there. There are special rates as well. And whenever you talk about these special rates will be on special items. Now, can there be an exemption notification? Yes, there can be an exemption notification. The rate of tax may be 5, but exemption notification can make it 0 with a condition. Now, please understand, whenever there is an exemption notification, this I am taking only for the purpose of your MCQ. So, it is not even 3-star or 5-star. I am just taking for the purpose of your MCQ. Supposing there is an exemption notification. Normally, I'll rarely use 1-star. This is only for your MCQ 1-star. Supposing there is an exemption notification on 1st of July and a new entry is added on 1st of December 2024. Exemption on 1st July 2017. New entry is added on 1st of December 2024. 1st December 2024. Now, an explanation is added to that new entry on 1st October 2025. Is it within 1 year or after 1 year? Is it within 1 year or after 1 year? Within 1 year of the new entry. You don't count 1 year from the original notification. You're not counting 1 year from the... Why? Because this explanation is to the new entry. This explanation is to the... And new entry was added on 1st December. So is it within 1 year? Yes. If at all there is an explanation added within 1 year, it will have a retrospective effect. It will have... So though this explanation is added on 1st of October 2025, but it is with effect from that entry. When that entry came? 1st December 2024. Retrospective effect. Retrospective effect. But if the new entry was added on 1st December 2024, an explanation to that entry was added on 30th June 2026. Is it within 1 year? Is it within 1 year now? It is not within. If it is not within 1 year, it will have prospective effect. That explanation is added when? That explanation is added when? That explanation is added on 30th June 26. It will have effect from 30th June 26, which means it will have prospective effect. It will have. So they are trying to tell a very simple thing. If an explanation is added within 1 year to an exemption notification, don't see exemption notification. If it is added to an entry, see that entry. See that entry. It will have retrospective effect. Though the explanation in the first case was added on 1st October 2025, but it was having effect from 1st December 2024 when that entry was added. When that entry was added. Retrospective effect. If an explanation is added to an explanation, if an explanation is added to a exemption notification, and if it is added to an entry, see that entry. See that entry to exemption notification after 1 year. If it is after 1 year, so in the second case, the new entry was added on 1st December 2024, but explanation to that entry was given on 30th June 2026. So it is after 1 year, then that explanation will have only prospective effect. When that explanation is given, 30th June 2026, only from that date it will have effect. Only from that date it will have effect. Clear? The logic is very clear that if it is given within 1 year, you have understood the mistake or error or confusion within 1 year, old date. It is effective from old date, retrospective effect. If it is given after 1 year, it will have effect from current date. It will have effect from current date. It is just like your friendship. If there is some confusion between you and your best friend, if you try to explain soon, it will nullify the effect, retrospective. The opposite from, okay, that was, you meant it otherwise, I could see from your face expression, but I'm sorry, I did not mean to tell this. Explanation meaning enna irukku? It is only for removal of doubts. I did not mean it. I did not. So your friendship will be back to normal. Rather, both of you will forget after a few days. But you have said something to your friend which you did not intended, or he mistook in other way. And if you clarify after 2 years, 3 years and all, and you're not in talking terms, after 2-3 years, if you tell him, you might be friends. Hi, hello, will be there. But will it be your friendship the way it was few years back? No, same thing. It It will have that date effect. You will start talking, but not like old times. Not like old times. Clear? So that is this understanding only for MCQs. It is not even 3 stars or 5 stars. Might be a very good question for your MCQ. Right. Now, please understand this very important aspect which we'll be using in next chapter, small dealers. This will be using. Taxable supply means levy is there. Taxable supply means levy is there. Non-taxable supply means no levy. Non-taxable supply means no levy. When levy is there, there may be collection, may not be collection. But when levy itself is not there, surely there is no collection. Surely there is no collection. Taxable supply, levy is there. Non-taxable supply, no levy. Leviable means taxable supply. No levy means non-leviable means non-taxable supply. Exempt supply is drafted in such a way that exempt supply means 0%, rate itself is 0, or there is a rate 5, 12, 18, but it is 100% exempted. So here levy is there but no collection. Nil rated or 100% exempted. Nil rated or, but exempt supply includes non-taxable supply. Exempt supply means nil rated, 100% exempted, but it includes, when we talk about non-taxable supply, there is no levy, no collection. Now this brings to a very confusing position, because taxable supply includes exempt supply. Exempt supply includes non-taxable supply, but never apply mathematics here. That does not mean that taxable supply includes. Don't apply math. If A includes B and B includes C, therefore A includes C also. Correct? That is a mathematics. GST and your accounts are not good friends. GST or income tax are not good friends. GST and your mathematics not good friends. Here do not apply. Taxable supply includes exempt supply. True. Exempt supply by the definition includes non-taxable supply. True. That's it. Do not go beyond it. They have done it purposefully. That's it. You may ask why they have done it purposefully. Supposing I am dealing with liquor. What are the non-taxable supplies? Non-taxable supplies are 2 alcoholic products and 5 petroleum products. Non-taxable supply is 2 alcoholic products and 5 petroleum products. Non-taxable supply is 2 alcoholic products and 5 petroleum products. And not supply is 3 cases of not supply plus 8 paras of schedule 3. We saw deemed not supply in 2 parts, right? First was 3 parts, 3 points. Any person 1 point, government 2 points. Any person 1 point, government. And then we saw 8 paras of schedule 3. Totally 10 paras, but for your syllabus, we completed with reinsurance commission, co-insurance premium, reinsurance. So that is not supply. That is not supply is different from non-taxable supply. Not supply were 3 plus 8 cases that we discussed. In not supply. Non-taxable supply is 2 alcoholic products, 5 petroleum products. 2 alcoholic products, 5. Please understand the effect. Not supply is not part of aggregate turnover. Not supply is not part of aggregate turnover. But non-taxable supply is part of aggregate turnover. It's part of aggregate turnover. Sir, not clear. Don't worry. I'll make a very small example to make you understand the impact. So any activity can be transacted into not supply, supply and not supply. Supply can be taxable, exempt and non-taxable. Your aggregate turnover will include taxable supply, exempt supply and non-taxable supply, because exempt supply includes, but not supply is not part of it. Supposing I am dealing with a normal product. Say I am dealing with one, say let us take metals, 100 crores. Alcoholic liquor for human consumption, 20 crores. And co-insurance premium, 2 crores. What is my aggregate turnover? All will be my sales. GST and books are not friends. Your GS books figure will be, your book sales will be 122 crores. Your book sales will be for GST. What is your aggregate turnover? It is only 120 crores. Not supply is not included in aggregate turnover, but non-taxable supply is included in, your liquor will be included in aggregate turnover. Your 5 notified petroleum products will be included in. Got that? Though we are not paying GST. See, what is common between not supply and non-taxable supply? This what is common? This year discuss the difference. What is common? In both the cases there is no levy, no GST. This is common thing. What is separate we are discussing, but what is common? Whether it is not supply or non-taxable supply, levy itself is not that. Levy itself is no GST. But what is different? Non-taxable supply you include in part of your aggregate turnover so that you become bigger. The more big you are, more provisions of GST are applicable to you. More provisions of GST are applicable to you. Not supply, not even added in your aggregate turnover. Not even added in your. Got that? Got that? Calculation of aggregate turnover in the next chapter will be a very important area for ICA has never ever asked this question. I'm not focusing it too much, but I have made you understand there's a difference between not supply and non-taxable supply. Not supply and exempt supply includes. Therefore, turnover of non-taxable supply will also be added in, because aggregate turnover tells that we will include. Aggregate turnover tells only this. Aggregate turnover includes taxable supply and exempt supply. But exempt supply tells that no. I include. Aggregate turnover includes taxable and exempt. But exempt supply tells that I include non-taxable supply. So aggregate turnover net effect is taxable supply, exempt supply and non-taxable supply. But it will not include. If it is not supply, you will not include it. It should be supply. It should be supply. And finally, the concept of your composite supply and mixed supply in this small chart 5-star. This only small chart. Surely there won't be a separate question most of the times. It will be part of a bigger question. Value, when you find out the rate of tax, you have to determine. Normally, if you're lucky enough, separate question. 2 independent cases, tell whether it is composite supply and mixed supply and the tax statement. Composite supply, first you have to always check composite supply. First you have to always check, then you have to check. So first evaluate composite supply. Composite supply means what? 2 or more taxable supplies given together in conjunction of each other, given together. Here 2 or more individual supplies given together. That 2 or more taxable supplies given together. Here 2 or more individual. They may be taxable or not, but they are individual, independent. Composite supply, they are given together in ordinary course of business. That is, they are naturally bundled. You will find the term natural bundling. They are naturally bundled. In mixed supply, they don't use the word artificial bundling, but they give a hint. Mixed supply is a supply which is not a, which means what? Artificially bundled. It is telling that it is not composite supply. It means what? Artificially bundled. Artificially bundled. Now, pricing here. In case of composite supply, invoice can give single price or multiple pricing. We have taken a lot of examples in the previous chapter valuation where it was multiple pricing. Phone, one price, initial warranty, then extended warranty. It can be split up, or single value could have been given, split up could have been given. We took example of 1 lakh, 2,000, 3,000. It would have been 1 lakh also, 1 lakh 5,000 directly also. 1 lakh 5,000 directly also. Single price or split up price, multiple pricing. But for it to be a mixed supply, surely it should be only It should be given for a single price. It should be given for a condition. That is the definition will tell that it should be given for a single price. I am all taking these terms from single price. And in definition of composite supply, they tell that one of the supply should be. It is again from definition. But obviously, there won't be any principal supply in mixed supply because it is not a composite supply. It is not a. So all these first 5 points I have taken from where? I have actually taken from the definition. First you have to check composite supply, only then check mixed supply. Why? Mixed supply tells that it is not a composite supply. So first you have to check composite supply. Second, in composite supply they use the word 2 or more taxable supplies. In mixed supply they use the word 2 or more individual supplies. Third, in composite supply they use the word, they are given in ordinary course of business naturally bundled. Naturally bundled given in ordinary course of business. Here, they don't give it, but it is implied. It is not a composite supply means what? It is artificially bundled. Next, pricing in composite supply is silent. Nothing is given. So it can be a single price or split up, multiple. But in mixed supply, they specifically tell it should be for a single price. It should be for a. And finally, in composite supply definition, they tell that one of the supply should be. Obviously, in mixed supply, they don't talk because there is no principal supply. What is principal supply? Main supply. Predominant element. That is the definition of principal supply. Predominant element and other supplies are kuti, incidental. Principal supply means it is having the predominant element in composite supply and other supplies are incidental ancillary, kuti supplies. Right. What is the tax treatment? We have already taken examples. Tax treatment in composite supply will be determined by what? Will be determined by if the principal supply is having 5%, entire supply, entire value 5%. If the principal supply is having 18%, entire value. If the principal supply is having 0%, entire value 0. Mixed supply. Supply with highest rate of tax. If there are 3 supplies, 5, 12, 18, you'll go with 18. 0, 5, 18. 0, 5, 12. Highest rate amongst that. Supply which is having the highest rate of tax. That will decide the tax treatment. That will decide the everything else. The first 5 points are only making you understand what is composite supply, what is mixed supply, and it is all taken from the definition. Definition is always given in section 2, except for definition of supply which is given in section 7. The last thing is tax treatment, section 8. Only tax treatment is said in section 8. Only the tax treatment is said in section 8. Clear? The meaning of mixed supply and composite supply. Mixed supply and one of the generally circulars are not asked, but institute one time has asked this circular. I will give you a few examples. Yoga with, okay, what is the classic example of composite supply and classic example of mixed supply? Coaching class with book. Coaching class with book. What is the, this is example of naturally bundled. Staying in hotel, hotel accommodation with free breakfast. Composite supply. Composite supply. Your school education with hostel and mess. Composite supply. Your tour package with guide. Naturally bundled. Composite. Classic example of mixed supply. Diwali gift box, which will have sweets, chocolates, greeting cards, a silver coin, dry fruits. Not naturally bundled. Not naturally bundled. Right? Or combo offers. Go to Big Bazaar. Refrigerator with grinder free. Mixed supply. Refrigerator with grinder free is mixed supply. Car with phone free. Mixed supply. Combo offers. Combo offers. They are mixed supply. They are mixed supply. Paste with brush. Come. Emotion. When you're reading the law, keep emotions at home. Paste, brush, puda. Which is it naturally bundled? Then why? So paste, brush, so emotionally we are connected. The moment it is paste and brush, first thing that we do when we wake up in the morning is this. And they're always together. Sutta. Are they naturally bundled? No. Got that? Once you understand this example, forever it will be registered that this, though always used together, it is not composite supply, because naturally bundle means what industry does it. Whether industry does this. Paste, when you go to any store and you are purchasing paste, you will tell, where is my brush? No. No. It is not naturally. That is naturally expected. So, I have explained this point. Depend what is naturally bundled, what is artificially bundled. Either you can understand from the images, or you understand in a very simple way that it is all about industry perception and customers' expectation. Industry perception and custom. What is it? Industry offering. How is that industry works? If industry is giving it together, majority of the place, not all the place. Whether all schools have hostels and mess? But normally hostel, going to a college or school, your parents will ask this, do you have a? It might be a case that more than 60-70% of the schools are not having hostel. But what is the normal expectation of the parents? Correct. That decides. And rather, the opposite person will, sorry sir, we don't have it. They will not be surprised, because they know that this is normal expectation of the parents. When they come at my academy, they do ask. Correct. I'm not surprised, because this is a normal expectation that a parent will have. Got that? So it is two things. What the majority of the employees are doing in that industry, and what is the expectation of the customer. It depends. It is a subjective thing. That is a subjective thing, but it depends. What is the industry practice? When you go to a tour operator, you will tell that, okay, whether my food is also included. And if it is not included, sorry sir, food, breakfast is only included, lunch and dinner, no. That's a normal expectation. That's a normal expectation. Normally prevailing practice will decide whether it is naturally bundled or artificially bundled. Got that? 10-15 years back, an apartment, premium flat in that apartment, top floor, with all luxuries. It was not naturally bundled. They were not giving it naturally. Right? So if at all you go to top floor, normally if at all you take 15th floor, the amount is 5 crores. But if you take the top floor, the amount is not 5 crores, it is 10 crores. 10 crores, 5 crores extra for the extra amenities, premium look. Right? So it depends on that thing. Few years back, 10-15 years back, it was not normal. But today, when you go to any apartment, the top floor will have a premium charges. The topmost floor will have a premium. You can merge it. Maybe in each floor there are 3-4 flats, but top floor, you can make it like a villa. Correct? Correct. So it will have premium charges. Now it is normal. Now it is naturally bundled. Now it is composite supply. So that extra 5 crores principal supply is only construction. 5 crores is for premium amount charged for the special privilege. Charge for the special location. Special location. That is part of composite supply. Right? Adi, if at all I was asking this question 15 years back, it might not have been because it was not normal practice of the industry. Right? Today, a motor bike with helmets is not naturally bundled. But over a period of time, what has happened, I have given one example. Another example, what is going to happen after 10-15 years? Nowadays, if you see e-vehicles, it is very common to have 2 helmets or 1-2 helmets within that. So after 10-15 years, any motor vehicle with helmet will become normal. So when it becomes normal, it is that. Depends on the industry. Depends on the industry. Right? One question which is asked by ICA in this is GTA. Goods Transport Agency will have transportation charges plus loading unloading charges. Is it composite supply or not? It's composite supply. So they have answered it's common. But if transportation charges is collected separately, that is over. And separately you pay for loading and unloading. Independent. Both are independent. Then whenever they are independent supply, there's no question of. Okay, last question to complete this. Can there be two or more supplies which is neither composite nor mixed? Can there be two or more supplies given together by the same supplier to the same recipient at the same point in time? But it is neither composite nor mixed. Two or three? Example. Two or more independent supplies given by the same supplier to the same recipient at the same point in time with the same invoice.
College exam fees, separate semester fees.
And that's all part of composite education only. Exam. Excellent. You go to one shop, Big Bazaar, you purchase 10-15 items. Right? You go to a confectionery stores. Why go to appliances? Normal. Every one of us has experienced it. Go to a confectionery stores. Purchase 10-15 items. Bread, chips, fruits, vegetables. Is it naturally bundled? Remove it. It's not composite supply. Is it for a single price? Each item separate rate. So it fails the definition of composite supply as well as mixed supply. Therefore, each item separate rate. If one item is having 18, this price, this rate. Next price, next rate. 5%, that price, that rate. So each item will have its separate GST. Item 1, value 100, rate 18. Item 2, value 200, rate 5. Item 3, value 300, rate 12. Why? It is not composite supply. Why? Not naturally bundled. It is not mixed supply. Why? Separate pricing. Separate. Every one of us sitting here has experienced. Whenever we walk into a confectionery stores or the example that she gave, Big Bazaar, where I purchase refrigerator, fridge, I purchase even my ready-made garments. Family is going for shopping and getting different items from the same shop. It is neither composite nor mixed. Right? So that completes our very small but very important area. I have not even asked you to see entire page. What? Actually, it is 25% of a page. In this entire page, I am asking you to only see this blue color, not even 25%, lesser than that. Only this chart, that's it. So when you're revising, only this area, sufficient. It will include everything about your composite supply and mixed supply, including the tax treatment. Are you guys clear with this understanding? So when you talk about your chapters, we have seen your levy, we have seen GST in India, basics, levy, valuation, classification. So now when we move on post lunch session, it will be other chapters. Are you guys clear till here? So till now, what have we discussed is all about your basics, correct? The important areas we have seen in your GST from India. We also seen the important areas which are there in your levy, mainly supply. We discussed in length about supply. We also discussed about your valuation and your classification, mainly touching your composite supply and mixed supply. So now our focus would be entirely on your small dealers chapter, which in reality there's nothing called as small dealers, but we are making it simple to understand what happens with small dealers in GST. So one area is taken from your registration chapter, section 22, read along with section 23 and 10/2019 notification. This area focuses on your registration limit, which is mainly 20 lakhs, but at times it will be 40 lakhs and at times it will be 10 lakhs. Your registration limit, when you are required to get registered. When your turnover crosses 40 lakhs or when your turnover crosses 20 lakhs or when your turnover crosses 10 lakhs. So this is your registration limit. Section 22 read along with 23. One notification 10/2019 CT. Then we'll be talking about a bit bigger person called as a composition scheme dealer, where he can be under composition scheme if his turnover is up to normally 150 lakhs, but at times 75 lakhs and at times 50 lakhs. Normally it is 150 lakhs, but at times it is up to 75 lakhs and at times it is up to 50 lakhs. So that is section 10. That is section 10 in its entirety. So only one section deals with your composition levy, which is your section 10. Section 10 of CGST Act. So this is the core, and we are discussing one of the most important definition that you have in GST law, which is aggregate turnover. This definition is not only used in this chapter, it is used in various places throughout GST, but we are seeing the meaning here, and the same definition is to be adopted every other place where you see the meaning aggregate turnover, right? So there are a lot of times that direct questions have been asked with respect to your aggregate turnover. Straightforward questions are asked with respect to your aggregate turnover. Now let us take this case where Tata Limited is having its branches in Maharashtra and Delhi. So directly we are first trying to understand the definition of aggregate turnover. Or Tata Limited is having one GST number in Maharashtra, another GST number in Tamil Nadu, and Tata Limited in Maharashtra deals with liquor 10 lakhs non-taxable supply, petroleum products 20 lakhs non-taxable supply, exempt supply 30 lakhs, taxable supply at 18%, 40 lakhs, export 50 lakhs. Right. And when you talk about in Delhi, it deals with rectified spirit, which is another non-taxable supply 1 crore. Your Fernand's oil 2 crores. Fernand's oil is not there in notified petroleum product list. It is only PM, Narendra Modi and MHA. So Fernand's oil doesn't comes in that list. Fernand's oil is subject to GST. It is not a non-taxable supply. It is a taxable supply. Exempt supply 3 crores. Taxable supply at 12%, 4 crores. SEZ 50 lakhs. Please understand, all these supplies will be added to whether it is a taxable supply, whether it is a, I'm just underlining few things, whether it is a taxable supply or whether it is exempt supply. Taxable supply also includes Fernand's oil, because that is also taxable to GST, or exempt supply, or whether it is non-taxable supply, liquor, petroleum in Maharashtra, rectified spirit in Delhi. Everything is included. Everything is included. And it also includes interstate supply, intrastate supply. Whether it is local sales or interstate sales, both are included. And interstate supply includes export. Interstate supply includes Tamil Nadu to Maharashtra is interstate supply. Tamil Nadu to USA is also interstate supply. One state to another state, interstate supply. One country to another country is also. And interstate supply also includes supply to special economic zone. SEZ technically it is in India, but it is treated like foreign territory. It is treated like foreign territory within India. Right. So exports and supply to SEZ. That is interstate supply. That is interstate supply. So it includes taxable supply, exempt supply. Exempt supply includes non-taxable supply. It includes intrastate supply, interstate supply. Interstate supply includes export and supply to SEZ. Supply to SEZ. Right. And will you take per state turnover or pan India turnover? Aggregate turnover means pan India. Aggregate turnover means, so you will add everything. You will add everything. Pan India turnover. Pan India. So when you add everything, 10 plus 20 plus 30 plus 40 plus 50 plus 1 crore plus 2 crores plus 3 crores plus 4 crores plus 50 lakhs, you will get a figure. Right. So if you add all these figures, you will get about 12 crores. You will get about 12 crores. Initially, the discussion that we had is all about 12 crores. Now, we'll add few more things. Here, there is a supply from Maharashtra branch to Delhi branch, 60 lakhs. And there is supply from Delhi branch to Delhi branch. Delhi, multiple branches can be there. It is 80 lakhs. What to include, what not to include? Delhi, Maharashtra to Delhi will be included because it is deemed supply. Separate GST number. But Delhi branch to Delhi branch will not be included because it is same GST number. It is not deemed supply. They are not distinct person. They are not. So now we have one more clarity. Lot of things are now clear. Aggregate turnover includes taxable supply, exempt supply. Exempt supply includes non-taxable supply. Aggregate turnover is intrastate supply, interstate supply. Interstate supply includes exports and supply to special economic zone. Aggregate turnover not only focuses on actual supply but also focuses on deemed supply. It's not only actual supply, it is also deemed supply. Right? So you have got a lot of clarities and it is pan-India. Whether it is actual supply or deemed supply, it is all pan-India. So now you find 60 lakhs being included, 80 lakhs not included. So only the first item that is not included that we have found is 80 lakhs Delhi branch to. Rest all turnovers were included. Now the last final touch to this question, which means the most complicated question that can be asked by asked by ICA. In Maharashtra branch, Tata Limited receives an inward supply. Tata Limited receives an inward supply which is subject to RCM. And from Delhi branch, Tata Limited makes one outward supply which is subject to RCM. So in in Maharashtra branch, it is receiving one inward supply which is subject to RCM 2 lakhs. From Delhi branch, it is making one outward supply for 3 lakhs which is subject to RCM. So on its inward supply, who's going to pay RCM? Tata Limited is going to pay RCM. RCM means who will pay tax? Supplier or recipient? Supplier or recipient? So who will pay GST on this 2 lakhs? GST on this 2 lakhs will be paid by Tata Limited. And who will pay GST on this 3 lakhs? Customer of Tata Limited. Customer of. Though Tata Limited pays GST on 2 lakhs, it is inward supply or outward supply? Purchase or sales? Purchase or sales? You will not include purchase. Turnover means sales. So though on 2 lakhs, you are talking about Tata Limited paying RCM. But it is not turnover of Tata Limited, it is turnover of supplier of Tata Limited. It is turnover of, because for Tata Limited it is not sales, it is purchase. Likewise, though on 3 lakhs, Tata Limited will not pay GST, it will be customer of Tata Limited who is going to pay GST, but it is not included in turnover of customer of Tata Limited because for him it is purchase. For whom it is sales? For whom it is sales? So whether 3 lakhs will be included? Yes. So RCM, the person who is paying tax, for him it will not be included in turnover. It depends on sales. RCM turnover included or excluded? RCM turnover for supplier included, though he is not paying tax. RCM turnover for supplier, focus on this 3 lakhs. It is included. Tata Limited is not paying GST on this 3 lakhs, but it is included in turnover of Tata Limited because it is sales for Tata Limited. And RCM turnover, though recipient is paying tax, recipient will not include in turnover. So if you look at purchase side, Maharashtra branch, Tata Limited purchased something for 2 lakhs which is subject to RCM, on which Tata Limited will pay GST under RCM. Payment will be done by Tata Limited, but it is not on the sales, it is on the purchase. It is not on the sales, it is on the, and turnover always focuses on sales. So RCM turnover will be included for supplier, though recipient is paying tax. Simple. RCM turnover will be included in turnover of supplier, though tax is paid by recipient. Will be included for supplier, though tax is paid by recipient. Are you guys clear with this understanding? Are you guys clear with this understanding? So you have to look at the question carefully. That is it from supplier's point of view or is it from recipient's point of view? If I give this entire question, so I have given both purchase side and sales side. So there are 2 RCM. One on which Tata Limited is paying RCM, one on which customer of Tata Limited will be under RCM. It is included in whose turnover? Seller's turnover. So on that particular 3 lakhs, though customer of Tata Limited will pay GST and RCM, but it is included in Tata Limited's turnover. On that 2 lakhs, inward supply, though Tata Limited is paying GST under RCM as a recipient, it will not be included in Tata Limited's turnover, it will be included in supplier of Tata Limited's turnover. So you have to look at the question carefully. Out of all the turnovers, only 2 turnovers were not included. One, branch transfer within same GST number. It is neither actual supply nor deemed supply. Neither actual supply nor. And one, 2 lakhs RCM. Though Tata Limited is paying tax under RCM, but it is not included in Tata Limited. Reason? It is not outward supply, it is inward supply. It is not outward supply, it is. So now what is the total turnover? 10 lakhs plus 20 lakhs plus 30 lakhs plus 40 lakhs plus 50 lakhs. 1 crore plus 2 crores plus 3 crores plus 4 crores plus 5 crores. 60 lakhs and 3 lakhs. If you add all, 1.5 crores, 2 crores, 12 crores, 12 crores 60 lakhs, 12 crores 63 lakhs, 12 crores. So you will have final answer as 12.60 crores. 12.63 crores. If you add all, if other than 80 lakhs and other than 2 lakhs, if you use a calculator and add all, you will find 12 crore 63 lakhs. 12 crores 63 lakhs. This is asked at least out of say 4-5 question papers, at least 1 or 2 times directly they ask calculate aggregate. Question is simple, calculate aggregate turnover. And whatever types of complications are there, we have discussed everything here. Any permutation combination is discussed here. Any question of ICA you can attend. Any question of ICA you can easily attend when it is all about your aggregate turnover. When it is all about your aggregate turnover. Rather, we have went a step ahead. If you recall, if I were ICA, I will make this question more complex, but ICA will never do it. Never done in the history. Forget about inter, even at final. I'll unnecessarily give 2 things. One thing already given, liquor or petroleum products. I'll also give reinsurance commission. Reinsurance or co-insurance premium. Whether you will include that in turnover, whether you are going to include that in turnover, no. You are not going to include that in turnover. Thank you. You are not going to include that in your turnover. Why? It is not at all supply. It is not at all. So your aggregate turnover includes taxable supply, exempt supply. Exempt supply includes non-taxable supply, but it does not include not supply. Intrastate supply, interstate supply. Interstate supply includes exports and supply to special economic zone. Actual supply, deemed supply, but not supply. But not. So you get 3 points. Then finally, you are having 2 extra clarification. That one, it is pan-India. It is not state-wise, it is pan-India. Second, RCM turnover is included, but in supplier's turnover, though he is not paying tax. Tax payment is by recipient, but it is included in supplier's turnover. So if you club everything, you will total 11 points. You get an answer for your aggregate turnover. Aggregate turnover. Done with your aggregate turnover. Now, talking about your registration. What is your limit? Normal limit for registration. Normally it is 20 lakhs. But for few cases it is 10 lakhs. For few cases it is 40 lakhs. If you have gone through ICA material, can anyone tell how many pages it runs? Approximately it. Stable போட்டு கொடுப்பாங்களா? This state, this limit for goods, for services, for both goods and services. You see your ICA study mat, you will find a table, big table, heading will be states, then only in goods, then only in services, then goods and services. Then that answer will be 40, 20, 10, 40, 20, 10, correct? Forget about the complication, remember a very simple story. Right? When you talk about politics in India, just remember that simple story. Apni politics. Nama politics in Hindi is Apni politics. Apni politics in India can be summarized into 3 simple things. So, Apni politics in India can be summarized SUM. Apni politics Arunachal Pradesh can be summarized SUM. Sikkim, Uttarakhand and Meghalaya in 3 things. Tripura. What is that? Money, Manipur, land, Nagaland and Ram, Mizoram. So, Apni politics in India can be summarized into 3 simple things, money, land and Ram. Apni politics in India can be summarized into 3 simple things, money, land and Ram. Apni politics, Arunachal Pradesh. Summarized. Sikkim, Uttarakhand, Meghalaya. Three things. Tripura, money, Manipur, land, Nagaland, Ram, Mizoram. And whenever you are small, whenever you are kids, in terms of whenever you are about to complete your qualifications, till you are small, till you are very small, politics is important or time pass? You are talking about very small person or small person? Very small. Composition is small. Very small person, for him it should be time pass. Politics should be time pass. Telangana, Puducherry. Telangana, Puducherry. Clear? So, apni politics in India can be summarized into three simple things: money, land, and Ram. And we are talking about a very small person. For him, politics should be time pass. Politics should be time pass. Telangana, Puducherry. Now, what was the core of this entire story? Three things: money, land, Ram. Money, land, for three things: Tripura, Manipur, Nagaland, and Mizoram. Whatever you do in those states, answer is always, 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 always. Whatever you do in all these three states, answer is always by default. Answer is always by default 10 lakhs. Answer is always by default. So in all these three states, anything you do, answer is always, 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 always 10 lakhs. Tripura, Manipur, Nagaland, Mizoram. Out of this story, core part was three things: money, land, and Ram, 10 lakhs. What are the balance states? Arunachal Pradesh, apni politics. Sikkim, Uttarakhand, Meghalaya, summarized. And when you're small, it is time pass. Telangana, Puducherry. Whatever you do there, it is always 20 lakhs. Whether it is only in goods or only in service or goods plus service, it is 20 lakhs. Whatever you do is always 20 lakhs. Simple. All the other states and union territories, all the other states, remove the story. If you remove the story, balance out of 31 states and 5 union territories. Correct. In GST, there are 31 states. 28 plus 3. Union territories, 8 minus 3. So you are removing these 10. You are removing these 10. What are the balance? What are the balance? 25. Roughly not 25, 26. Right. For all of them, if you are dealing only in goods, it is 40 lakhs. Service, 20 lakhs. Goods plus service, 20 lakhs. Simple. Tripura, Manipur, Nagaland, Mizoram. Only goods or service or goods plus service? Louder, 10 lakhs. Arunachal Pradesh, Sikkim, Uttarakhand, Meghalaya, Telangana, Puducherry. Anything, only goods, only service, goods plus service. Balance states: Tamil Nadu, Maharashtra, etc., 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 including Andaman, Nicobar, Jammu, Ladakh, everything. Daman and Diu, Dagar, Nagar Haveli also comes here. Everything. Only goods. Service. Goods plus service. Over. Finished. 4 simple lines. Over. You know when it is your 40 lakhs, when it is your 10 lakhs, and when it is your 20 lakhs. You know entire story here. Now, one more special aspect. Now we are only talking about 40 lakhs. Forget about everything else. Only focus on 40 lakhs. When you have 40 lakhs, there is a positive point, there is a negative point. Normally, when 40 lakhs is applicable, balance states, union territories, and only goods. Correct? Balance states, union territories, and only goods. But if you're talking about goods plus interest on loan, one positive. If you're talking about goods plus interest on loan, you're dealing only with goods plus interest on loan. Normally, goods plus service means 20 lakhs. But if you are having goods plus only one service, that what is the service? Interest on loans or deposits, which happens to be exempted, then you can remain at 40 lakhs, need not come down to 20 lakhs. Normally, if I tell Tamil Nadu, only goods. Louder. Goods plus service. Goods plus interest on loan. You can be at 40 lakhs. Right? This is positive. This is plus. Though generally you will come to 20, but now here you can go up to 40. Now ulta, negative. Normally if I tell in Tamil Nadu you are dealing only with goods, what is the answer? Loud and clear. In Tamil Nadu you are dealing only with goods. What is the answer? What is the answer? But if I tell you are dealing with notified goods, if I tell you are dealing with manufacturer of notified goods. Not manufacturer, you're dealing, not manufacturer, trader also. Dealing with notified goods. What are the notified goods? Pan masala, tobacco, ice cream, and certain building materials. Pitbull. 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 Right. Pan masala, ice cream, tobacco, building materials. Pan masala, tobacco, ice cream, pan masala, ice cream, tobacco, pit, bull, building materials. You not remember exact building materials, building certain building materials. If you are dealing with any of these items, even small, in Tamil Nadu, my major turnover is, say, a normal product, metals. And small part of my turnover is pan masala. 40 lakhs or 20 lakhs? Small part of my turnover is pan masala. 20 lakhs. So when you're talking about dealing with pitbull, always 20 lakhs. Even small portion, 20 lakhs. Even small portion,
20 lakhs.
are you guys clear with this understanding? This is positive side or negative side? Now look at, I'll repeat the example. Tamil Nadu, only goods. Goods plus service. But goods plus interest on loan only. If it is goods, but one of the items is pan masala. Got that? So from basically 20 lakhs, you come to 40 lakhs. Goods plus interest on loan. And from basically 40 lakhs, you come to 20 lakhs. Normally goods means 40, but pan masala, tobacco, ice cream, building materials, you come down to 20. So one positive and one negative. Clear? Clear? If you have these concepts clear, you can attend any question of registration. Any question. Now please remember this simple thing. Always answer in two parts. One, what is the aggregate turnover limit? Step number one is, what is your threshold limit? What is your threshold limit? That is state-wise or pan-India wise? That is pan-India wise. Second, registration. That is state-wise or pan-India wise? So first is checking aggregate turnover, which is pan-India. Which is? Second is? First is checking threshold limit, aggregate turnover, which is pan-India. Second is registration. Threshold limit is aggregate turnover, ma. First is aggregate turnover, which is nothing but the threshold limit. See it pan-India. See it? Second is registration, which is state-wise, which is one state, one registration. One state, one registration. Now I have taken three things, tricolor, TTT. Every state will come in one part. Tamil Nadu basically is having possibility of 40 lakhs. Telangana, anything you do 20. Anything you do. Tripura, anything you do is. Tamil Nadu, possibility of 40. It may be 20, but possibility of. Tripura, anything you do. 10. Telangana, anything you do. Clear? You know, we are going to make your mindset in such a way, any question of ICA, you'll be through. So now you are aware which state, which limit. One state, if I ask, you'll get all the answers. That story contains everything. If I ask for one state, you'll give answers just like that. Puducherry. I will not even answer. Don't tell me goods service 20 lakhs. If I tell Meghalaya, you'll not even tell, sir. Don't tell me anything. Answer is? If I tell Nagaland, don't ask me anything. Answer is 10 lakhs. If I tell Maharashtra, then you'll say only goods na? Goods plus interest on loan? Notified goods? Goods plus service? Only service? So there you will ask me certain questions. Correct? Now ICA will never give one question, one state. They'll give that you're working in 3 states or 2 states. Once you work with 3 states, etc., once we complete this understanding, even if ICA gives 5 states, you know the answer. Now, what to do? If at all I tell that in Tamil Nadu, Telangana and Tripura, I am dealing only and only with goods. 10 lakhs, 10 lakhs, 10 lakhs. Now, one state tells, see me, 40 lakhs, Tamil Nadu. One state tells, see me, Telangana, 20 lakhs. Another state tells, see me, Tripura, 10 lakhs. When there are multiple states selling different limits. Your limit can be only one because aggregate turnover can be only one. So which one you'll select? You'll always go with the lowest. You'll always go with the lowest. Always in a family, only the younger brother or younger sister will win. Always. It is only the lowest. Always. Any family you take, whatever problems are there in the family, if two brothers or two sisters or brother and sister are fighting and parents are outside, the moment they come and they open the door, whom they are going to shout at first? Simple. Thumb rule. Who is going to escape? And that person would have created entire chaos. He would have made house into a waste shed. Right? Converting everything upside down. And he would have been the person who would have hit the elder one left, right, center. But when the door opens, who cries? Correct. Thumb rule. Who wins? So who is going to win? 10 lakhs. What is the aggregator now? Step 1. Step 1 is always what? Step 1 is always what? So step 1 is always ratio limit, which is pan India. Which is pan India. So what is the limit that you decide? And step 2 is what? And which is always state wise. I will not write one answer, I have to write 3 answers. Correct? In this case, what is my aggregate turnover? What is my limit? 10 lakhs. What is my actual aggregate turnover? My limit is 10 lakhs. What is my actual aggregate turnover? Have I crossed the limit? Should I take registration? Yes in Tamil Nadu, yes in Telangana, yes in Tripura. Yes in, I have to write 3 answers. Telangana, Tamil Nadu, Tripura and Telangana, I have to take registration in all the 3 states. Correct? If I change this question and I tell, I am changing this question a bit. Now this next question. Tamil Nadu, Telangana remains the same, but in Tripura, I am dealing only with exempt supply. I am dealing only with. Now whether Tripura will be affected or not affected. See why you came down to the limit? Because you want to help the lower state. Now Tripura tells that whether you help me or not, no use. Because I am not going to get any single paisa revenue. In my state, this person is only dealing with exempt supply. In my state, he is not going to give me a single paisa GST. You need not come down to 10 lakhs because of me. Now earlier the fight was 40, 20, 10. Now Tripura tells 10, don't look at me. I am not going to get any revenue. Forget about me. So what is the limit now? 40 and 20. Which will win? You got that? If in Tripura you are having only exempt supply or only non-taxable supply, Tripura is going to get what revenue? 0. Tripura is not affected. Tripura is, it tells that don't look at me. You go to higher limit. You go to a, now what are the possible higher limits? 40 and 20. Which one you will select? Lower. 20. What is the aggregate turnover? Aggregate turnover limit is 20, but what is the actual aggregate turnover? Have I crossed the limit? Yes. So as per 22, I have to take registration in Tamil Nadu, Telangana and Tripura, but you have to first write this answer. First you have to explain aggregate turnover. Then you have to write, as per 22, you have to take registration in Tamil Nadu, Telangana and Tripura, but 23 gives a relaxation. Telling that if in a state you are dealing only with exempt supply or only non-taxable supply, any state, in that state no take registration. So first answer should be get registered in Tamil Nadu, Telangana and Tripura, but finally when you conclude, as per 23, as in Tripura there is only exempt supply, it need not take registration in the state of Tripura. Thus, section 22 read along with section 23. Registration will be taken only in Tamil Nadu and Telangana. Tamil Nadu and Telangana. So that is the answer. This is because of 23. We are discussing 22, but this relaxation is coming out because of 23. Now, if I change the question a bit. Third question, a variant. In Tripura, I am dealing only with exempt supply, and in Telangana, I am dealing only with whether Tripura will get any revenue or a zero revenue. Telangana, any revenue or a zero revenue. Whether Tripura is affected, not affected. Affected, not affected. So Tripura will tell, forget 10 lakhs. Telangana affected, not affected. So Telangana will tell, forget 20 lakhs. So what is the limit now? What is the limit now? So now the limit becomes 40 lakhs. What is the actual aggregate turnover?
30.
Should you take registration? No. So as per 22 itself, no registration in Tamil Nadu, Telangana and Tripura. Right. Now, the last variant. In Tripura, I'm dealing only with exam supply. Tripura affected, not affected. So 10 lakhs relevant, not relevant. Telangana deals only with non-taxable supply. Affected, not affected. Not affected. So 20 lakhs relevant, not relevant. So basically you will go with what? Tamil Nadu limit, which is only goods, which means it is. But wait, Tamil Nadu has one of the item as pan masala. Basically it was 40. But because of pan masala it became, or question may give, in Tamil Nadu you deal with goods and, so basically it was 40, only goods. But if it is goods and service, either or. The question may give Tamil Nadu only goods but pan masala one item 20, or Tamil Nadu goods plus service 20. So now what is the limit? You are only seeing Tamil Nadu. Tripura gone, Telangana gone, you are only seeing Tamil Nadu. What is the limit? The limit is no more 40 lakhs. The limit comes down to 20 lakhs. Should you get registered? What is your actual aggregate turnover? 30. Are you crossing the limit? Yes. Should you get registered? Yes. Which state? 22 tells that get registered in Tamil Nadu, Telangana and Tripura. But 23 tells come here. You are not going to pay single paisa tax to Telangana and Tripura. In a state where you are not going to pay a single paisa tax because you are dealing only with exempt supply or you are dealing only with non-taxable supply, do not take registration even if your turnover in that state is 100 crores. Even if your turnover in that state is 100 crores. So because of 23, no registration in Telangana and Tripura. Telangana and Tripura. Clear? If I make it more interesting, fifth variant. Tripura only exempt supply. Telangana only non-taxable supply. Tamil Nadu only exempt supply. You first tell me what is the limit. Tripura, all the three states only exempt supply or only non-taxable supply. Tripura affected, not affected. 10 lakhs gone. Telangana affected, not affected. 20 lakhs gone. Now you are seeing only Tamil Nadu and you are dealing only with goods. So what is the limit? So first you have to answer aggregate turnover limit is 40 lakhs. What is the actual aggregate turnover? Need not get registered. Need not get. But if I change this 10 lakhs, 10 lakhs, 10 lakhs to 1 crore, 1 crore, 1 crore. Your limit is 40 lakhs, but your actual turnover is 3 crores. Should you take registration? Yes. In Tamil Nadu? Yes. In Telangana? Yes. In Tripura? Yes. Because of section 22. But 23 will tell, Thambi, why? In all the three states, you are going to pay a big zero revenue. So no registration in Tamil Nadu, Telangana and Tripura because of 20. 22 answer is take registration. 23 answer is no. Finally, you will go with 23. You will go with 23. Clear? So this is repeatedly asked question. Should you take registration or not? And believe me, the story of politics will make your life very, very simple. You need not buy hard this entire thumb rule, etc. Not required. Not at all required. Simple story, you know where it is 10, where it is 20, where it is 40. And at times it is 40, but you may come to 20. But at times it is 20, you may come to 40. Both. Plus and minus. You can play with it. You can actually, and more interesting is these questions. ICA will not ask one state question. ICA will ask multiple state question. So we have forgotten about that. We now know if at all it is 3 states, generally you'll go with the lowest. Unless otherwise that lowest state tells that don't look at me. Anyways, I'm going to get a zero revenue. You can go out and enjoy your higher limit. You can go and enjoy your. So that is this entire understanding. Clear? Any question of ICA, any question, randomly you take any question of ICA from your institute study mat or RTP or mock test paper or exam paper, randomly any exam, any paper, you go to ICA website, you just search whether there is any question on registration 22. Take a random question. With this particular simple example of 4 parts, you're through. Your mind is prepared how to look at the questions and how to understand and crack all the questions. Now, one very important point here. This is relevant only till you take registration. Once registered 40, 20, 10, irrelevant. Once registered 40, 20, 10, irrelevant. Which means, by mistake, if I have taken registration today, I have not started my business, but I have taken registration today itself. Whether I'll worry about 40, 20, 10? No. I have to pay tax. Once registered, payment is must. Once registered, payment is mandatory. Once you are registered, payment is mandatory. You cannot escape. You cannot escape. Once you are registered, done. Payment then becomes mandatory. Payment then becomes mandatory. Are you guys clear with this understanding? So once registered, do not look at it. This limit itself is for taking registration. Once I have taken registration, payment is mandatory. So this note you will find it there in the previous page. Once you are registered for any reason, payment is mandatory and about limit becomes irrelevant. The entire limit becomes irrelevant. This limit is only for registration. The moment you get registered, do not even discuss about 40, 20 or 10 lakhs. Right? Are you guys clear with this entire understanding? Done. We are through. Any question of 40, 20 and 10? Very high possibility that your question paper always talks about, you can always look at this way. Out of 4 exam papers, at least 2 minimum will have a question on registration, whether you should take registration or not. 50% probability that you will get this question. So please mark 3-star to aggregate turnover. This chapter is so crucial that from this chapter, for sure you'll have a question. If you're lucky enough, you'll have a question worth 8-9 marks. One of registration, one of composition scheme. Composition scheme, for sure there is a question always revolving in the exam paper, right? So for this particular thing, please mark 5-star. Your 20, 40 and 10. 20, 40 and 10. Now the 40, 20, 10 you can name them. Now, okay. Now you're talking about your composition scheme. A lot of things have to be very clear when you're discussing about your composition scheme. And why I have taken this together, you'll understand finally that why I say method we have not followed and why we have followed a method where both these things are given in the same chapter. There's a pakka reason why it is given together. Finally, you will find a differentiation chart as well. Very clear thing, reasoning is there. Here the limit is 150, 75, 50 lakhs, which is very kind of similar to 40, 20, 10. Very small means 40, 20, 10. Reasonably small, not very small, but small, 150, 75 lakhs and 50 lakhs. No registration means no payment, no return filing, no accounts, etc. Registration but simple scheme means you are registered, but payment is lesser. Return filing is simple. Stock details need not be maintained. You are better than normal scheme. You are better than normal scheme. So in your composition scheme, first it becomes very relevant that when it is which limit. Please split your composition scheme into 2. One, normal composition scheme, other is special composition scheme. Normal composition scheme, recall the same old story. What was the story? Apni politics. Apni politics is summarized into 3 simple things: money, land and Ram. Now you are very small or small? Very small is 40, 20, 10 ma. Now you are very small or small? You have grown up. Now politics is time pass or serious? So politics is no more time pass is removed. You should also understand that. So that story had one hidden short cut. Now you have grown up. Politics is no more, which means Telangana, Puducherry will not come in the states. Telangana and Puducherry will come along with other states and union territories. So this story takes care of that also. Now you are not very small, you have grown up. So politics cannot be time pass. So TP is not there. Telangana, Puducherry comes in other states and union territories, right? So when you talk about this Kutti story, Apni politics can be summarized into 3 things. That is Arunachal Pradesh, Sikkim, Uttarakhand, Meghalaya. 3 things: Tripura, money, land, Ram, Manipur, Nagaland and Mizoram. There the limit is 75 lakhs. In all other states, including Telangana, Puducherry, including It is 150 lakhs. This is for normal composition scheme. This is for, what about special composition scheme? Any state, any union territory. Simple. The higher we go are going, our life becomes simple or it is complex. In reality, it is complex. But if you look from outside, you are questioning. My son or daughter, my 1 hour only goes in explaining their questions. They'll ask absurd questions. Why you are going to office? You have to tell and make them understand. It's important. Why not you sit here with me? Why office, pa? Well, let's play. Take a cricket bat, I'll ball, you will bat. But after 2 balls, only my batting. You just ball. Life is very simple for them. Why moon comes only at night? Why not in the morning? Actually, a lot of questions you don't have an answer. Correct. Moon is very beautiful, but you don't get any energy. Sun is not so liking, but always party tells that go upstairs, see the sunlight, get some energy. You don't have clear-cut answers, right? So those things takes time. So here you're grown up, things are simple. Things are a bit simple, that questions automatically has an answer. You learn. So when you talk about the next level, special composition scheme, life is very simple. Life is any state, any union territory, 50 lakhs. Don't ask me that story. Whatever state, whatever union territory, it is 50 lakhs. It is 50 lakhs. So normal composition scheme, 75 lakhs or 150 lakhs. Telangana, Puducherry, 150 lakhs. Special composition scheme, even if you're in Tamil Nadu, in Delhi, in Maharashtra, in West Bengal, in Gujarat, Andaman Nicobar, anything, 50 lakhs. Life is very, very simple when you go at an advanced level, right? Now, obviously, you'll have a question. So, when it is normal and when it is special? Otherwise, we don't know. Normal composition scheme, what? Normal composition schemes means a scheme where you're dealing only with goods sector or restaurant outdoor catering sector. So, goods, restaurant outdoor catering, 150 lakhs, 75 lakhs. 150 lakhs. If you are not eligible for normal composition scheme, 50 lakhs, which means you're dealing with service. You're dealing with, if at all you want to break this up, what are you trying to tell? You're dealing with service, but not being restaurant and outdoor catering service. Not being restaurant and, correct, wait. So what if it is a combination? Goods plus service, because there we have evaluated all the permutation combinations. Wait, if it is goods plus services, goods 150 lakhs, 75 lakhs. Restaurant outdoor catering service 150 lakhs, 75 lakhs. Goods, restaurant outdoor catering service plus other services, plus if that other services is small, is, what is mean by small? Up to 10% of previous year state turnover. Previous year, it's not aggregate. Up to 10% of previous year or 5 lakhs, whichever is higher. Whichever is not lower. Generally government tells lower. This time it is higher. Whichever is minimum 5 lakhs you'll have. Minimum. So goods plus small service. Normal or special? Goods plus small service. 150 lakhs, 75 lakhs. Restaurant plus small service. Normal, 150 lakhs, 75 lakhs. Outdoor catering plus small service. 150 lakhs, 75 lakhs. Sir, what if it is goods plus service, but service is big? What if it is goods plus services, but service is big? Mechanic shop. Goods plus service. He'll also sell spare parts. But service portion is bigger or goods portion is bigger? Service portion is bigger or goods portion is bigger? So where he'll come? He'll come at 50 lakhs. He'll come at 50 lakhs. So here other services should be small. They have defined what is small. What do you mean by small? It should be service element other than goods plus restaurant outdoor catering. Other services element should be up to 10% of previous year state turnover of 5 lakhs, whichever is higher. Whichever is, supposing previous year state turnover is 80 lakhs. So what is the maximum other service you can have? Previous year state turnover is 80 lakhs. 10% of 80 lakhs, 8 lakhs or 5 lakhs. Which is higher? Now you can have service till, it can be in normal composition scheme. Correct? So that is how you understand whether normal or special. Maybe just to make you understand, there are examples given here, but I'll ask normal examples. I'll make it very simple here. Tamil Nadu, Tripura. Whatever examples given, Tamil Nadu, Tripura. Only goods. Both goods.
150 lakhs.
Tamil Nadu 150 lakhs. Whether you are normal or special? Normal goods. So in normal, Tamil Nadu is 150 lakhs, Tripura is? Which limit you will take? Louder. Clear? Second, Tamil Nadu, Tripura, both only services. Tamil Nadu, Tripura, both only goods. So both only goods means you are talking about what limit? 150 lakhs, 75 lakhs, finally you resort to 75 lakhs. Tamil Nadu, Tripura, both only service. Any state it is 50 lakhs. Aggregate turnover should be up to 50 lakhs. Tamil Nadu, Tripura, goods plus service, but service element is small. Service is small, which means within the limit, 10% of previous year state turnover or 5 lakhs, whichever is higher. Normal or special? Normal or special? So Tamil Nadu limit and Tripura limit. Which one you will select? Tamil Nadu, Tripura, goods plus service. But this time service element is bigger, which means it is more than 10% of previous year state turnover of 5 lakhs, whichever is higher. Service element is more. Then normal or special? Normal or special? In special, always it is. So first, what you have to decide? First, please decide whether you are coming under normal composition scheme or whether you are coming under special composition scheme, depending on what you are doing. Then decide the state. First, don't look at the states. First, look at the activity. First, look at the activity. Normal or special? Normal or special? Are you guys clear with this understanding? Are you guys clear with this understanding? This is how you have to find out the limit. This is how you are required to find out the limit. Which state? What activity? Which state? What limit? One state means you will give the answer easily. Interesting thing is only when you are working in more than one states. Which we have seen with 40 lakhs, 20 lakhs, 10 lakhs. Now we are seeing with 150 lakhs, 75 lakhs and 50 lakhs. 150 lakhs, 75 lakhs and 50 lakhs. If you see different answers, you'll find 75, you'll find 50. In this case, you'll not find 150. Here, there's no possibility of going up. Once it is 150, 75, it's always 75. Sir, can there be any fight between 150 and 50? No. Can there be any fight between 75 and 50? No. Because when it is 50, it is only 50. When it is 50, it is only 50. So fight can be only between 150 lakhs and 75 lakhs. And by default, the moment that's a fight, answer is 75 lakhs. Answer is simple. Things are becoming simple. Are you guys clear with this understanding? So first decide normal or special based on activities. Based on, then look at the state. Supposing in both the states you're dealing only with service or you're dealing with goods plus service where service is big. It is special composition scheme. You be in any state, answer is 50 lakhs. Supposing you're dealing only with goods or restaurant outdoor catering, or you're dealing with goods, restaurant outdoor catering and other small services, then it is other services which is small. It is normal composition scheme. It is normal. Answer can be either 150 lakhs if both the states 150 lakhs or 75 lakhs if both the states 75 lakhs or 75 lakhs if one state is 150 lakhs and another state is 75 lakhs. Whichever is lower. The limit would be based on the lower limit. Based on the, is there a possibility of jumping up? No. There's no possibility of jumping up. Jumping up was possible in 40, 20 and 10 lakhs. 40, 20 and 10 lakhs. And you'll finally understand why there's no jumping up. Once we complete, you'll understand why there is no jumping up. Are you guys clear with this understanding? Now, one thing that you need to understand, this limit of 150 lakhs or 75 lakhs or 50 lakhs is not like your exemption 40 lakhs, 20 lakhs, 10 lakhs. It is different in many ways. The main difference we are going to discuss with this example. Emotionally, I know you'll not have a control, but still I'll take that risk of asking question. When you spoke about 40 lakhs, 20 lakhs, 10 lakhs, that aggregate turnover limit was based on previous year or current year? That 40, 20, 10 lakhs based on which year? Previous year or current year? When you are looking at this limit of 40, 20, 10, should you take registration or not? Whether it is based on your previous year turnover, aggregate turnover, or current year aggregate turnover? Louder. Okay. How many of you believe it is current year? Maybe 5, 6. Volume have come down. How many of you believe it is previous year? Majority. I know how to confuse. So now, suddenly the answer from current year, which was initially there, switched over to previous year, where only 5 of them have raised the hands for current year. About 9 or 10 have raised the hands for. Just to confuse. I thought you'll give a wrong answer, but you gave a right answer. I changed my tone. It is current year. It is current year. Did I ever utter the word previous year? It was current. The moment I cross this, I have to take registration. Current year. It is all current year. So that aggregate turnover limit of 40 lakhs, 20 lakhs, 10 lakhs is based on current year aggregate turnover. Whenever you cross in current year, at that point in time, you take registration. You take, so it is not previous year. But here, composition scheme, both are relevant. Previous year for entry, current year for exit. I repeat, previous year for entry, current year for exit. Now first let me tell the activity, then the state. You'd have to fix the limit. If it is only goods, normal or special? If it is only goods, so the moment I tell goods, it's normal. It is either 150 lakhs or 75 lakhs. If I tell Maharashtra, so that is how you have to look at the question. I say will give the data, it will give the states. You have to look at the question in that particular manner. Okay, this is how, this point is there. Now I'll resort to 150 lakhs. First, you freeze the limit. Now it is my first year of operation. Can I enter into composition scheme? This is my first year of operation. So my previous year aggregate turnover is, can I enter into composition scheme? My entry is allowed. My entry is allowed. So I can enter into composition scheme because it is my year 1. Year 1 my turnover is 140 lakhs. Am I under composition scheme? Throughout year 1, I am actually working under composition scheme. So what is the composition tax that I will pay? Normally for goods sector, rate of composition tax is 1%. So for my first year, I will pay how much? 140 lakhs multiplied by 1%, 1.4 lakhs. Clear? Now I am entering my second year. When I enter my second year, am I eligible for composition scheme? Yes. The moment I enter my second year, I have to first check my previous year. What is my previous year aggregate turnover now? My previous year becomes year 1. For year 2, my previous year becomes year 1. Now I am entering year 2. You can call it as financial year 25-26. So my previous year is financial year 24-25. What was my aggregate turnover? Is it within 150 lakhs limit? First we have freeze the limit. Initially we have freeze the limit. Is it within 150 lakhs? Yes. Can I continue? Yes. I am continuing. I am still inside. Rather than writing as entry, I am actually continuing. Rather than writing the term entry, I am actually continuing inside composition scheme. Entry, yes, it is entry, but I am continuing that entry. I have already entered, I can continue. I can continue. Every year beginning I have to check. Now my current year turnover is 160 lakhs. Now please understand 150 lakhs is still relevant for exit also. Now previous year aggregate turnover I will check for entry, current year aggregate turnover I will check for exit. till I touch 150 lakhs. I'll be under till I touch 150 lakhs. After that, I'll be under regular scheme, normal scheme. So my current year turnover is 160 lakhs. So up to 150 lakhs, I was under composition scheme 1%, 1.5 lakhs. The moment I cross 150 lakhs, I have to go to regular scheme. I have to pay regular tax. And this product had regular tax as 18. So I'll pay balance 10 lakhs multiplied by. But look at the points carefully. The first was composition tax, but the next is regular tax. The next is regular tax. Clear? Now I am talking about my third year. The moment I enter third year, can I enter my composition scheme? Can I enter my composition scheme? My entry in composition scheme itself is not allowed. Because in year 3, that is financial year 26-27, if I look back to my previous year, which is financial year 25-26, my previous year aggregate turnover was more than 150 lakhs. Can I enter? No. So my entire current year, I will be working under, though my current year turnover is only 130 lakhs, but I cannot enter inside composition scheme. So entire year I will be working under regular scheme. Entire year I will be working under regular scheme. So entire 130 lakhs regular scheme. So what will be the tax? 130 lakhs multiplied by, what is the regular tax? 18%. In this question 18, if it gives 5, 5. If it gives 12, you will go with 12. 23.4 lakhs. So if you look at the question carefully, year 1, I paid only composition tax. Fully enter composition. I entered and I remained in composition scheme. Year 2, I entered, but I exited composition scheme in between. Therefore, part of the year I was paying composition tax, partly I paid regular tax. Year 3, I cannot even enter composition scheme. Therefore, entire year I have to go under regular scheme. I have to pay regular tax. I will not even talk about year 4 because all the questions, whenever you see questions, all the questions that I discuss will always be having 360 degrees approach. So when I completed 40, 20, 10, it means any question you will be prepared. When I completed 150, 75, 50, the questions are given in such a manner, any question you will be ready. The moment I complete this, year 4 will be just like year 1. Year 4 will be just like, because when I enter year 4, my previous year aggregate turnover is it up to 150 lakhs? Yes. Can I again think of composition scheme? Can I again enter? Story continues. Clear? Clear? In exemption scheme, you looked at aggregate turnover only for, in composition scheme, you look at aggregate turnover first for previous year, whether you can enter or not. And then for current year, you see for what? Not for entry. You see it for exit. You see it for exit. Are we guys clear with this understanding? Are we guys clear with this understanding? So that you have to easily, you have to always remember that this is how you have to work out the questions. Right? Rather, we have worked out a question where ICA gives calculate composition tax as well as regular tax, or they'll give a question. They love the question of year 2 because partly it will be composition tax, partly it will be regular tax, partly it will be composition tax, and partly it will be regular tax. So you have to actually find out that. Clear? Now, please understand your entry and exit is actually not only based on these figures. This is all about entry and exit based on numbers. Entry and exit based on number. Previous year aggregate turnover up to 150 lakhs, 75 lakhs, 50 lakhs. Exit based on number. Current year aggregate turnover crosses 150 lakhs, 75 lakhs, 50 lakhs. There is one more exit based on number which you have indirectly discussed. Your current year service turnover, if you are in normal composition scheme, if your current year's service turnover crosses 10% of previous year state turnover or 5 lakhs, whichever is higher, you have to exit. You have to exit which scheme? Because that 10% is done only for normal composition scheme where you can have goods, restaurant, outdoor catering plus small services. What are that small services? 10% of previous year state turnover or 5 lakhs, whichever is. So the moment I cross that, I have to exit composition scheme. So two are about exit and one is about entry. Two are about exit and one is about entry. So this complicated question I have given, which has got no significance for your exam. So I'm not taking that complicated question. Just one point I will tell. Whenever you're seeing the exit are two. Supposing I'm working in two states, Tamil Nadu, Maharashtra. Entry will be previous year turnover totally up to 150 lakhs. Assuming 150 lakhs is our limit. Assume that you are dealing only with goods, restaurant, outdoor catering and other small services. I assume. Can it be 75 lakhs? Yes. Can it be 50 lakhs? Yes. So entry is both the states together up to 150 lakhs, 75 lakhs, 50 lakhs. Exit when you cross current year. Second exit is state wise. In Tamil Nadu, my maximum service in this example, my maximum service previous year Tamil Nadu turnover was 60 lakhs. So maximum service in Tamil Nadu in current year is 10% of 60 lakhs or 5 lakhs, whichever is higher. So I can have maximum service up to, if my service is up to 6 lakhs, I can be under, this is relevant only for normal composition. I can be under now. The moment it crosses 6 lakhs, exit. Right. Likewise in Maharashtra, my previous year Maharashtra turnover was, so what is my maximum service in Maharashtra? 10% of 70 lakhs or 5 lakhs, whichever is, which means it should be up to, now in this question I have kept it below 7 lakhs. The moment it crosses 7 lakhs service in Maharashtra, so totally how many exits are there? 3. Totally Tamil Nadu plus Maharashtra crossing 150 lakhs. Tamil Nadu service crossing 6 lakhs. Maharashtra service crossing, any of the one event happening first, go outside. Total Tamil Nadu and Maharashtra turnover in current year crossing 150 lakhs. Service turnover in Tamil Nadu current year crossing 6 lakhs. Tamil Nadu was 6 lakhs. And service turnover in Maharashtra crossing, any of this thing happening first, any of these three things happening, exit. And when I'm exiting from composition scheme, this is repeatedly asked question earlier. Now ISC has stopped asking this question. Can I be under regular scheme in one state and composition scheme in other state? No. So if I'm removed from composition scheme in Tamil Nadu, because I have violated condition in Tamil Nadu, I am removed not only from Tamil Nadu, I am removed also from Maharashtra. Any of these three event happening first, my total or aggregate turnover of current year, Tamil Nadu plus Maharashtra together crossing 150 lakhs, get out. Tamil Nadu service turnover crossing 6 lakhs, get out. Maharashtra service turnover crossing 7 lakhs, get out. Any of these three things will be happening first. Whichever is earlier, whichever is, I have to get out of composition scheme, not only from one state but also from all other states. Even though I violated condition in Tamil Nadu, I have to go out from Maharashtra as well. Clear? Yes, please.
Tamil Nadu violates the 6 lakh limit, then shall continue to be in special commission?
No. So this is addressed. You are switching over from normal to special is not at all allowed. Okay, I'll answer it this way. Whether you have to select normal or special decides is dependent on what? First you have to, what is the basic criteria for entry into special composition scheme? I'm trying to address your question. So her question is very simple. The moment I cross Tamil Nadu 6 lakhs or Maharashtra 7 lakhs, from normal composition scheme, can I go to special composition scheme is the question. Answer is no. Why? I have to decide whether normal or special in the beginning. And when I'll decide for special, I am not eligible for, I know my business, I know how it operates, whether my service will be more or goods will be more, I know it. So I have to decide in the beginning. Now, you might have said, now I am not eligible for normal composition. No, it's not about eligible. You are eligible in normal composition scheme. You are working in normal composition scheme. After that, you exited. So your eligibility was there. So when in this question is there, when I'm crossing Tamil Nadu 6 lakhs turnover, was I eligible for normal composition scheme? Yes, I was eligible for normal composition scheme. I actually worked in normal composition scheme. I crossed that for 6 lakhs. So it is not that I'm not eligible. I was eligible, but now I am exiting. But now I am. But what is the criteria for special composition scheme? You should not be eligible. Can I switch over from normal to special? No. Whether it is normal or special, normal to regular scheme, special composition scheme to regular scheme. Exit is always to regular scheme. Put in a very simple bracket. Exit is always to regular scheme. So whether I am working at a normal composition scheme or special composition scheme, exit is always to regular scheme. Exit is always to, I have to go to regular scheme. So very valid point, but no, not possible because of the language. And intention is also clear. You should have thought that in the beginning, whether you want normal or special. You cannot enjoy both. Otherwise, people will misuse it. Why? I'll tell you. In special composition scheme, rate of tax is 6%. Normal it is 1. So initially you will enjoy pay only 1. Then later on you will pay for some time. Say, a chart accountant can only go for special. Can only go for special. So that I have to decide in the beginning. Got that? Normal composition scheme, the rate of taxes normally 1%. Restaurant outdoor catering 5. But normally for goods it's 1. And special composition scheme it is. So you look at the question carefully again. I would have done malpractice if this point was not there. For the initial, always for 5 lakhs is minimum. For initial 5 lakhs, I would have paid. Then not allowed. Not allowed. Clear? So entry point, there are only 2 criteria. One is based on turnover, 150, 75, 50 lakhs. One is based on activity. One is based on what activity? You should not be manufacturing notified goods. You should not be manufacturing notified goods. There it was pitbull. There it was pitbull. Here it is pitbull attack. Pitbull attack. There it was pitbull. Here it is pitbull has attacked you. Pitbull has attacked you. So what is pit? Pan masala, ice cream, tobacco, bull, building materials. Yes, attacked you. Aerated water. Aerated water. Pitbull attack. There it was pitbull. Here it is pitbull attack. Pitbull. There it was both manufacturer and trader. Here it is only manufacturer. If you are manufacturing notified goods, you are not allowed. If I am manufacturing pan masala in my previous year, can I enter composition scheme in current year? No, I cannot enter composition scheme in current year. I cannot. First, my turnover in previous, entry is always based on previous year. Remember this always. Entry is always based on previous year. 2 things in previous year. My limit of turnover 150, 75, 50 lakhs. I should not be manufacturing notified goods. Pitbull attack. Pitbull attack. Exit is always based on current year. 2 based on numbers. 1, my turnover in current year, aggregate turnover in current year crosses 150 lakhs, 75 lakhs and 50 lakhs. And second is only applicable for normal composition scheme. My service turnover crosses 10% of previous year. State turnover or 5 lakhs, whichever is higher. Right. Now, other things in current year for exit. I start dealing with non-taxable supply. I start dealing with alcoholic liquors 2 items, petroleum products 5 items. I start making interstate outward supply. My sales earlier were within Tamil Nadu. Now I am making interstate outward supply. Interstate outward supply. Can I have interstate purchase? Yes. Interstate sales not allowed. Interstate outward supply not allowed. The moment I start dealing with interstate outward supply, get lost. I start dealing with supply of services, not goods. Supply of services through ECO, online platforms, electronic commerce operator, where TCS is there. I start dealing with services through ECO where TCS is there. Or I become CTP, NRTP. I go in a state for exhibition. I become CTP, NRTP in current year. In current year, if I do any of these things, I have to go out. What are these 5 things? 2 based on numbers. 2 based on numbers. 5 based on activities. 5 based on activities. So, what are the 5 based on activities? First, I start dealing with non-taxable supply. I start making interstate outward supply. I start supplying services through eco where TCS is applicable. Then I become CTP and RTP, or I start manufacturing. Sir, we have entry also notified goods. If I was manufacturing pan masala in previous year, current year I cannot even go. But if I start manufacturing pan masala in current year, I was under composition scheme. The day I start manufacturing, I have to go out. I've already entered. The day I start manufacturing, I have to go out. Clear? Clear? 2 based on turnover. My current year aggregate turnover crosses 150 lakhs, 75 lakhs, 50 lakhs. Or my service turnover in normal composition scheme. This is only for normal. Crosses 10% of previous year state turnover, 5 lakhs, whichever is higher. 5 based on activity. I become CTP and RTP. I start manufacturing notified goods. I start interstate outward supply. I start non-taxable supplies. I supply services through eco where TCS is applicable. The day I do, supposing I do all these activities on 11th of August. I was under composition scheme till 11th of August. Today I am removed. Today I am exiting. It is about entry or exit. Entry or exit. Entry or exit. 2 based on numbers, 5 based on activities. 2 based on numbers, 5 based on entry. 1 based on number, 1 based on activity. 1 based on number, 1 based on activity. Remember that. What is the major advantage and major disadvantage of composition scheme? Advantage is lesser rate of tax, simplified scheme, quarterly payment, yearly return. Major disadvantages. On my purchases, I cannot avail ITC. On my sales, I have to pay tax. 1 or 5 or 6, but I cannot collect it from my customers. Disadvantage. On my purchase, I cannot have input tax credit. It becomes my cost. Cascading effect. Again, your question. Cascading effect is there? Yes, very much there. On my sales, normally I can collect tax from the customers, but here I cannot collect tax. I have to pay from my pocket. I'll give bill of supply. I'll give bill of supply. I'll not give tax invoice. I'll give bill of supply. Whether RCM will be applicable? Yes. I have to pay RCM. Normally, I'll tell pay RCM by cash, get in credit. Pay RCM by cash, get in credit. Pay by cash, get in. But composition scheme dealer, pay by cash, no credit. No credit. Disadvantages. These are the disadvantages of composition scheme. ICAI once have asked this question. 25-26 taxable supply. Taxable supply 20 lakhs. Exempt supply, non-taxable supply, interstate outward supply, total aggregate turnover, and you're in which state? Delhi, dealing with goods. Goods, Delhi, goods, Delhi, goods, Delhi. Louder, louder. So, 150 lakhs. But your turnover is 100 lakhs, which includes non-taxable supply, which also includes exempt supply. Right. This is all data for financial year. Am I eligible for composition scheme in 26-27? Louder, louder. Sutta, emotion. Your emotions are now higher. Just now, 1 minute back. 1 minute. Previous year only 2, previous year only 2, previous year. Now the question is from which point of view? Question is from 26, 27. For 26, 27, in previous year I have to check whether my aggregate turnover is up to. Yes. Am I manufacturing pitbull attack? No. Sir, the moment we saw non-taxable supply, the moment we saw interstate, this was an exam question. So the question had 2 parts. Calculate aggregate turnover. Lot of them had calculated aggregate turnover correctly. So part marks given for that. Whether you are eligible for composition scheme in 26-27. Now the question is from 26-27 point of view. For which previous year is 25? Are you eligible? Previous year you don't see the breakup. You are pakka eligible. Sir, interstate outward supply. Current year don't make. Sir, non-tax. Current year don't do. The day you start doing, get out. The day you start doing, entry is allowed or not? Is the entry allowed? Is the entry allowed? Yes. You know, in the evaluator's comment, so you have examiner's comment after you get the suggested answers. I don't know. A lot of the students, rather major of the students, don't see that examiner's comments. So on one part of ICA portal, you write examiner's comment for every paper. They have written. Majority of the students went wrong. Why? They emotionally were attached to non-taxable supply and look at this thing. You already read the law. Revised Panirkinga. This is a marathon course. Still that and forget about everything else. Just 1 or 2 minutes back, I said previous year 1 turnover, 1 activity, 1 turnover, 1 activity, 1 turnover, 1 activity. Current year 2 turnovers, 5 activities. Exit. Previous year is entry. Now we are discussing about entry or exit. Why are you saying exit points? Not allowed. Entry was allowed? Yes, very much allowed. Entry was allowed? Yes, allowed. Are you guys clear with this understanding? Are you guys clear with this understanding? Now, if at all you look at this entire composition scheme, we are almost done with the composition scheme. And one part which is important part which you discuss halfly is what is the composition tax that you have to pay. You have understood it, but what is the composition tax that you have to pay? The composition tax that you are required to pay is 1, 5 or 6. If you are a manufacturer of goods, if you are a normal composition scheme, 1% manufacturer of goods. For trader of goods, 1%. Manufacturer of goods also 1%, trader of goods also 1%. Restaurant outdoor catering, 5%. Restaurant outdoor catering, 5%. If you are in special composition scheme, 6%. But there's small difference. When you talk about the percentage, percentages of taxable supply as well as exempt supply, except for a trader. So manufacturer will pay 1% on taxable supply plus exempt supply. Trader will pay 1% only on taxable supply. Restaurant outdoor catering 5% on taxable supply as well as exempt supply. Special composition scheme, only 1% will pay only on taxable supply. Trader of goods, that too under normal composition scheme. What difference it makes? Supposing you are having 2 items, goods 1, goods 2, 18%, 0%. And if you are under composition scheme, manufacturer or trader, total turnover is 30 lakhs and 20 lakhs respectively. So if you are a manufacturer, you will end up paying 50 lakhs multiplied by 1%. The same thing if you are a trader, you will pay only 30 lakhs multiplied by 1%. You will not pay on exempt turnover. You will not pay on. Please. That doesn't mean that for a trader, exempt supply is not allowed. Exempt supply is relevant for previous year aggregate turnover for entry. It is relevant for current year aggregate turnover for exit. It is also relevant for maximum service based on 10% of previous year state turnover. Even for a trader. Only when making the payment, trader will ignore exempt supply. Only when making the payment, trader will ignore. Otherwise, throughout this, trader will also consider exempt supply. Trader will also consider. Are you guys clear? So when you are paying composition tax, you pay on monthly basis or quarterly basis. This is quarterly payment. These turnovers generally, whenever I am giving this data for payment, this always represents quarter of the current year. First quarter of current year, second quarter of current year, third quarter of current year, fourth quarter of current year. Stop here. When you're paying on quarterly basis, it is state turnover or aggregate turnover. State turnover. So if at all, I change this question, in Tamil Nadu 30 lakhs, in Maharashtra 20 lakhs. So in Tamil Nadu, you will pay 30 lakhs multiplied by 1%, 0.5 CGST, 0.5 Tamil Nadu SGST. In Maharashtra, you will pay 20 lakhs multiplied by 1%, 0.5 CGST, 0.5 Maharashtra SGST, 0.5 Maharashtra. So quarterly payment based on current year. So the beauty of this is you have seen all these things. For entry, what you do? You see previous year, aggregate turnover, pan India. For exit, current year, aggregate turnover, pan India. For service limit, again for exit, normal composition scheme. You see 10% of previous year, state turnover of 5 lakhs, whichever is higher. It is for exit, relevant only for normal composition scheme. So there, now suddenly you replace with state turnover. You replace with previous year state turnover. Calculating current year service based on previous year state turnover. Payment, quarterly basis, but which year turnover? Current year. So when I am paying in Tamil Nadu, it is Tamil Nadu state turnover multiplied by 1%, 5% or 6%. Paying in Maharashtra, it is Maharashtra state turnover multiplied by 1%, 5% or 6%. Now the beauty of this is, in one place there is aggregate turnover, two places, and two places there is state turnover. Aggregate turnover, previous year is also there for entry, current year is also there for exit. State turnover, previous year is also there for finding the inner limit, service limit. And current year, state turnover, current year is also there for payment. For composition scheme has got all the types of turnover, all the years. Previous year, aggregate turnover, entry. Current year, aggregate turnover, exit. Previous year, state turnover for maximum service in normal composition scheme. And current year state turnover, though you are not going to pay on quarterly basis, but it is of what quarter? Quarter of a current year. So current year state turnover for payment. It has all these things incorporated in it. Now, when you see the percentage turnover, I have missed one point, though it is implied, but still, just to have a clarity check. When you are paying 1% as a trader or a manufacturer, you will not only pay on goods portion, but also on small service. Say 1% on small service. When you are paying 5% on restaurant outdoor catering, you will not pay 5% only on restaurant outdoor catering, you will also pay on that small service. Normal composition scheme. Special composition scheme. You will pay 6% not only on service but also that small goods portion. Mechanic shop, 6% on service, but he can also deal with spare parts. So 6% is not only for service but also for that small goods portion. So that is your percentage part. So this will be sufficient for you to check the entry, check the exit and calculate the numbers. Entry, exit and calculation of numbers. Are you guys clear with this entire understanding? So that is all about how your composition scheme works. One final thing to touch everything else. Throughout composition scheme, interest on loan will not be counted. Interest on loan is exempt. Exempt supply is included in all turnover. But throughout composition scheme, you will not count. Interest on loan will not be counted. So your interest on loan will not be counted throughout your composition scheme. You will not count. You will not count in previous year aggregate turnover. You will not count in current year aggregate turnover. You will not count in previous year state turnover. You will not count in current year state turnover. Previous year aggregate turnover is for entry. Don't count it. I'll give only one example to make you understand that everything is applied for others also. My previous year state turnover in Tamil Nadu is 160 lakhs. I'm only in Tamil Nadu dealing with goods. But 145 lakhs goods, 15 lakhs interest on loan. 145 lakhs goods, 15 lakhs. If I see 160 lakhs, am I eligible or ineligible? But I will not count interest on loan. So what is my previous year aggregate turnover? I'm eligible. I'm just giving an example. This is true not only for previous year aggregate turnover, also for current year Aggregate turnover. Also for previous year, state turnover for finding the maximum service in current year. Also for current year state turnover for making the payment, for making the throughout composition scheme, interest on loan throughout. Interest on loan throughout. Clear? Clear? So your composition scheme, please mark where all you have to put 5 stars is this particular page where you see this entire entry and exit. Where you see entire entry and exit. Where you see entire entry and exit, this particular page, put a 5 star, entire page. So both this part as well as the next part which is there in the same page, and then your 5 star will be there in that one page where percentage is given, that first part of this page. 1 or 5 or 6. 1 or 5 or 6. Forget about the differentiation chart is for your revision if at all you want. Only that small area, 5 star. Clear? Clear? Now, before I end, this is mandatory example. This example itself is nothing but combination of registration and composition scheme, and you'll understand why I have given together just to differentiate. If I have given the separate places, you'll not understand the differences. And secondly, institute 3 or 4 times has asked the same type of question, which links registration and composition. Which links registration and, so you're there in Tripura. You're there in with goods. Dealing with goods. It is your first year of business. It is your, what is your registration limit in Tripura? Louder. Composition scheme limit. And the item that you're dealing is having 18%. So you'll register only when it's crossing 10 lakhs. And you'll be under composition scheme till 75 lakhs. It is your first year. So previous year aggregate turnover is always less. 0. Previous year aggregate turnover is, so previous year it is always 0. First year means previous year is 0. When I tell first year of business, previous year I did not have any business. Now, this assessee wants to enjoy both registration limit and composition scheme limit. He'll get registered only when he wants to only when he's liable for registration. He'll be under composition scheme till he can be under. So his turnover at one point in time crossed 10 lakhs. Then it moved to 20 lakhs. Now it is not 10 plus 20, it is 0 to 20, additional 10. Then it is 75 lakhs. So it is 0 to 75, that is from 20 lakhs additional 55 lakhs. Then 0 to 85 lakhs, which means additional 10 lakhs. And finally, when he stopped the year, it was 110 lakhs. Now please understand in this case, till the first 10 lakhs, 0 to 10 lakhs, he'll not pay any tax, he'll get registered only then. He'll get registered only then. When the moment he's getting registration, he'll select composition scheme. He'll select, so 0 to 10 lakhs, no registration, tax 0. Now he can be under composition scheme from 10 lakhs to 75 lakhs or 10 lakhs to 85 lakhs. So they clarify that overall limit is 75 lakhs. It is not 10 plus 75. It is 0 to. So he has to exit when his turnover is 75 lakhs. Right. But when he's paying composition tax, will not ask entire 75 lakhs. He entered at 10 lakhs. He's exiting at. So what is the difference? So he'll pay composition tax only on 1%. So now he has exited. So initially he was not having any. First is no registration period. Then it is composition scheme period. Then it is regular scheme period. Regular scheme period. So now from 75 lakhs till 110 lakhs, it is regular scheme. So here his year is ending by 110 lakhs. But when he exited composition scheme, so what is the additional term? 75 to 110. 75 to 110. 35 lakhs multiplied by Got that? So this could be more interesting if they bring in service. See, they can put combination of everything. They can give combination of 10 lakhs, in this case 10 lakhs and 75 lakhs. 10 lakhs and they can give combination of 20 lakhs and 75 lakhs. Or 20 lakhs and 150 lakhs. Or 40 lakhs and 75 lakhs. Or 40 lakhs and 150 lakhs. If at all I replace this example by Tamil Nadu, it becomes 40 lakhs and 40 lakhs and 150 lakhs. If I tell Tamil Nadu but notified goods, 20 lakhs and he will be in composition scheme till he starts. He can enter but he'll exit. He'll exit. So I'm just telling how it will vary. If I give example of Tamil Nadu and service, 20 lakhs and 50 lakhs. 20 lakhs and can be any permutation combination. So first see the question, look at the activity, look at the state, recall your memory, recall the story, decide on 40, 20, 10 lakhs, decide on 150, 75 and 50 lakhs. First thing, before we entered, we first decide on the limit. First decide on the, even when you are writing the answer, first decide that registration will be taken only when it is crossing so and so aggregate turnover. Composition scheme limit will be there if his previous year aggregate turnover is so and so amount, and he has to exit when his current year aggregate turnover crosses so and so amount. Clear? First you do that. This is a simple answer. You're linking both registration and composition scheme. Now, when you see the last part of this small topic, entry, exit. Entry, can you enter composition scheme at any point in time? No. Now we have discussed this point just now. The example that we discussed, when you're taking new registration, you can enter at any point in time. When you're taking, you can enter composition scheme at any point in time. All you have to do is, at the time of making application, tell that I want composition scheme. But if you're already registered, if you're already from regular scheme to composition scheme, you cannot enter any point in time. You can enter only from the beginning of next financial year. Beginning of, for which you have to give intimation before the previous financial year, completion of previous financial year. You can enter into if at all you are already registered in the regular scheme, you cannot enter. On 11th of August, I cannot enter into composition scheme if I am already registered. I can enter only from 1st April 2026, where I have to give intimation on or before 31st March 2026. But if on 11th August, I am taking registration, can I enter composition scheme? Yes. In the registration application itself, I have to tell that I want composition scheme. I want. So this is a repeatedly asked question in your MCQs. Not 5-star, no 6-star, no 5-star, no 3-star, but MCQs. But exit. Can exit happen at any point in time? Exit from composition scheme to regular scheme? Yes. Between the year. I've entered. I did not like the scheme. I can go out. I entered. I like the scheme, but I violated the condition. I can go out. Exit can happen in between. Exit can happen in between. Entry, if you are already registered, only can happen from the beginning of next financial year. If you're taking new registration, it can happen in between. Exit, any point in time. Exit can happen in between. Exit can happen in between. So that completes our entire discussion about your small dealers. About your small dealers. So this is a very, 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 very important area. Short question will be there. If you're lucky enough, you'll get 2 questions. One only about your registration. Almost we have seen everything. Yes, you have to see some other parts for registration. 22 fully we have seen, 23 partly we have seen, but you have to see 24. So once you see all these 3 questions, short question, one you can expect, and another question, composition scheme. If you're lucky enough, you'll get both. Normally either or, but if you're lucky enough, you'll get both. Are you guys clear with this entire understanding? Right. So now we'll have what is the time now? We'll have a break. Then we'll start with the most important chapter. What is the most important chapter? So we'll see that.